Welcome to the Breakfast Club. My name is Darren Hancock, and this is the ThetaWave Trader. Again, ThetaWave Trader is not a person, it's a mindset. Getting into the right mindset, relax, find your set, find your strategy, execute, let the trade pan out as it will. Knowing how to read the charts will get you to where you want to go, and that's what we're here for. We're here to kind of show you how to read price action live as it trades, hour by hour, minute by minute, 15 seconds by 15 seconds. Our objective is to stay on the horse. You'll hear me say that all the time, staying on the horse, trying to stay in price action instead of waiting for guessing where price action is going to go. We want to try and be on it as accurately as we can. We want to be able to recognize entry points, setups, and then manage your mind, managing what you're going to do when the trade is on, how you're going to act from there. Are you still staying true to your overall goals and objectives? Okay, let's have a look at well, that didn't work. I wanted that to get to how's that for a start, hey? Took that one a little late. That's going to be my stop loss. It's going to have to be here now. Right off that low. Go back through here. All right, so I was looking at this yesterday and saw the breakout, and then I thought I'd take it right off this institutional order flow entry drill and try to let that go higher. And I let it run last night. But the break would be if we take out this low, and that's the reversal here if that's going to stick. So I'm just going to leave the stop at the bottom of this where it's already made it to here. And we'll see if that closes below here. If it closes below that, looking at this, looking for lower prices. And apparently NVIDIA posted less than admirable results. So that could be the reason for the drop. But we'll see what happens at 9 o'clock here. If 9 starts to set a new high, and then 10, we could get back up into here. We have a small change in direction right here. Traded back inside it. Looking for this to get above this level now. To go back into that range. So if we trade below this level here, again, on a close, potentially run below this low. So I'm just going to watch to see if we can get back above that. This is not, yes, this is the midnight open range. Midnight open candle. look for, where am I looking at here? Sorry, I'll start the analysis for a second. I just want to check something here. Remember, you want to keep your powder dry. We're getting closer to the non-farm payroll. Okay, now I got it. All right, let's get going. So that's the reversal. And we'll see if we can get back up into this premium array up here and turn this into something more positive. That's the problem with this one here. If this wasn't the institutional order flow entry drill, wanted to keep going, I have to weather all that drawdown. So we have closed below that low. It's a good sign. We have a reversal. It's a good sign. Let's see if that used the midnight open range, pop up above it, find support at it. See if we can keep going higher now. Look and see if we can get back above these highs here and get back into this gap above us. And we have to be prepared for not actually getting there. If we break this low, look for this to be the reversal for continuation on the downside. And yes, let's look at ES here on the daily. Just close that one down. Look for a retracement back into this these fair value gaps first before going higher. You have to see it roll over, come back in here one more time, and then start to march higher. I know we're pretty close. This could just continue from there. I'd like to see it drop back down into these fair value gaps here. And then look for a run back to 6093. That gap finally has been filled. This imbalance has been touched. We're inside this common gap now. I want to see if this consequent encroachment holds price now and we start to move this higher, or whether or not we work the bottom half of this. So where we work inside that range is going to be important. I think we can get above the consequent encroachment of that and then break the high on the close today. You look for tomorrow for a retracement back into it to continue pushing higher. If we get on the downside of it, look for a retracement back into this candle here. We'll see how that we act off that open. Natural gas on the way back. We got a small up price. This is holding price right now. We can get back above here. I'd look for 824 for a return back into that to keep going higher for copper. Got to get above this level here first though. Natural gas finally hit that downside. Now I want to see if we can get through here. We can close below that and then look for a run on these equal lows. Goals I'll get to in a second. AGNC. See, I told you. I've been holding that one for years, and I finally wanted to get out of it. It finally hit a nice little upside objective for me right in here, like right at the top of this candle here. And what did it do? It took off. That's typical. Now I'm just humored. I just want to see how far up that goes without me. We've climbed back up on top of this level again now. I'd like to have seen the sell side liquidity it taken. We just took out this little low here. If this closes above here now, I want to see this level in wheat provide some support. We're really overlapping arrays here. We've got the premium level 1 here and the discount down here. That whole range, we're really inside that whole BISI side here. So we have to get above here on a close if you want to keep pushing higher into this one. If we can use that for support, we can run up here today, freeze up, come back down here into this array, this BISI for Thursday, and then move back up Friday. Come back, found support. We're leaving off of here. I want to get back through 105.32, close. We've hit the coffee's upside objectives. 1, 2. I'll make sure I don't move that 362.25. 362.25 right there. So now we're getting a reaction off of that. So far, coffee's been moving well. Still looking for cattle's upside objectives here. And looking for cocoa here. Not sure about corn. I want to see take that high out. Come back and use this order block here. Just the breaker that takes out this high. If we can clear that, come back to the breaker and find some support at that. Start going higher. Be anywhere inside these two candles. Lean hogs still looking for this mean threshold above us. Crude oil. Where are we going with crude oil here? Still got to get through this mean threshold here. We're kind of hung up on it right now. We have traded below this reverse pattern here, and now we've traded back up inside it and inside this order block. We're getting a bit of a reaction off that. I'd like to see these lows get taken out, start digging down into this imbalance and this BISI here. So you look for a lower time frame, see if we can find an entry. So here we see this is the reverse, and the low is not taken yet. We're right back up inside it. Perfect. So you want to see this get taken right there at 73.26 on a close on a 1 hour chart, and then come back and use this level. So that would be up in here, anywhere from that area all the way down to anywhere inside here. So if we get a run below this low, a retracement back into this level, and then run down lower, it's got to break 72.93 on a close. It's got to get below here on a close, then come back and use this as support. Okay, I see that. So you went down, up, back into here, and then run lower. That would take out the highs back into that order block there. We're in that consolidation there. So there's some interesting things I want to look for inside oil to see if we're going to go for these equal lows below us. If we retrace, we still got to get below here on a close. Otherwise, we just run back up into that level here one more time, which is 73.70. Take out the highs for 10 o'clock and then start running lower. How's that? Let's do that, shall we? Gold is on a little sprint up. Looking for this equal highs above us here now. Create a low. I saw this one last night when we had a change in direction. Here, retraced back into this level here to go short. I did not pay myself at the next level here, so this one from there was a nice perfect entry. Went down and then came right back against me, took my stop loss out. Should have paid myself at the first opportunity, which is right there. Didn't follow your rules, man. So equal highs we're looking for next, all the way up to 27.78. I like that for upside now. Back inside this reversal, looking for continuation. Still looking for this downside here. I'd like to see this get run out in February, even all the way back to here. and then catch along there. Yeah, that's not what I wanted to see in Disney. Not for Craig, anyway. It's great if you want to try and look for a discount, but we're still looking at these lows here. If those lows get taken on the downside, then look for continuation inside this range to fit at least 50% this order block. And then if we leave, I would anticipate we'd get below there and we'd start running into these gaps below us. But we'll see how it acts here. Right there is where it should freeze. Hold up on here and then see Disney start to push back higher. If it doesn't and we close below this today or in the next hour or so, then look for a run on these lows and then see if there's just a stop run or whether or not we get a full body run through that and close and then come back and use this level to go lower. So this becomes a very key area right now, along with this for Disney. Barclays. Still marching higher. Walgreens still coming lower. Still looking for that to get back down into here. These are good. This is good. I want this to be wrong. I want to see this start going higher. That's it down here. We could even have that come up to here. I want to see this stay open. We'll revisit that in March. I'm going to get through here today. I want to see this get down below these equal lows. And they're making their little run higher. These lows have been run out. Still don't see a decent setup in there yet. I want to see a portion of this busy here stay open for British pound and that to go higher. I don't want to see it actually come back and retest this order block here. I want to see that act as a gap and start running higher. And you can see this retest here and go higher. 103.56. I'm going to go look at that one. We're banging around between these two right now. It's got to get above here. Start running up into this little 65.5. 65.70. Upside for that. Come on, silver. Okay. Good morning, Hadi. Anonymous, how are you? Let's keep turning my head way over here. FOMC date at 2 p.m. today. Thanks on Disney. You're welcome. Screen trading yesterday. Yeah, that's my concern though, is that we did not get above this level, right? There's this little dip here. I think if you look at this low here, or this low was taken with this candle, I think 111.64, 111.57. So that low was taken, but it wasn't on a close. So as soon as that low is taken, you want to see this level and this level get taken to the upside. So as soon as it hit that, that was like, oh, that's a nice sign. Because typically I want to see, if we're going to break this low, you want to see the body, you want to see a body break that low. And when it comes back up, you want to use this level as support to go lower. So you took the low, we're back inside that level, and now it's going lower. So typically you want to see a body do that, this thing, but there it has taken that low with a wick. Now my concern is that enough for this to run these equal lows out now and start heading into this imbalance and volume imbalance here, or price imbalance. There's only one side delivery. So let's see where we go in the open of this. Oh, forget it. Look at the open. The pre-market's way up here. That's what you want. That's good. See, we're still inside. We're inside this one. We have not closed above it. We literally closed on it, came all the way back inside it, and now that pre-market is 1339. So we're right up into that premium array again, inside this range. So that's a good sign. Now, if you can close up above that and leave a little gap there as a breakaway gap, that'd be beautiful. Mean thresholds next, and then consequent approachment of this hourly that we've got sitting up here. So looking good, Craig. Looking good, man. All the time you can hold this level here and leave these equal lows, you get back up into that small range. I like that. That's the pre-market already. You're right in there. All righty. Looking for that run back up in here. Light stop made 1.7. Disney looks great pre-market. Yeah, it does. So good morning, Russell. All right, Russell. Focus, man. Zen. Let's get zen. That doesn't sound very zen, does it? Nice deep breaths. Nice deep breaths. And perhaps it's not the best time to engage the market on a non-farm payroll week. This might be just to sit back and relax and just kind of enjoy the ride, Russell. And just kind of chill. Just take some paper trades for a while. And if it takes off, really identify what your psychological thing is here. So if we catch along and it takes off, do you have that little, oh man, I wish I was in this. I wish I was in this, because that's something you want to put in check. You say, look, it doesn't matter. This is great. Be happy for other people, and then just go, I'm waiting for my opportunity, because it's a 1 minute chart. There's plenty of them coming. And there's plenty next week as well. And this week is not the do or die week, right? Good morning, Abs. I want 140, 114. Russell. At this point, the reversal is at the consequent quotient PA, so no good for me going along. I'm worrying about the crypto. If it goes lower, I go broke on my spot positions. It takes me out there. If we lose this here, then we're coming back into a, we've got a little structure break here, reverse right here. No opportunity to get in here, nothing off of here. Just ran straight through into this candle. If that just reverses on me now, see how your fail-safe is if we start closing below here, that candle we did, but it ran all the way right into my stop loss. So that's what stop losses are for quick dramatic turns like that. Back inside here. Back to this little consolidation. Cam model 1. It's 9:30, so I wouldn't touch that right now. Wait and see what the 930 to 10 gives us. If we end up going, we came back, we haven't closed below that level yet. Opened, lower. What is the high on that candle? 603. And the close on this is 602.50, so it did close below that. Ran back up inside it. That's like 0.5. You got me on that one. So this is just a retracement back into this candle, and now we're looking to go lower. You've got a little pool of liquidity here. You're busy. You've got these lows. I want to see the structure break down here. Come back into this level. Look for lower prices. See how we drove all the way through. If this was a cam model 1 entry, we drove all the way through on a closed cam 2. So you're looking for this low to get taken next. So looking for that level there, looking for that to continue going lower. This is the one you're looking for right here. Once it breaks, we didn't get an opportunity to get in here. There is one here, back to that level to go lower. Right here, that's the little area I look for. We get below it, come back to it. We'll look for a short. Take out that low. Move my stop loss here too. Go lower. I keep playing with my stop loss here. I'm in at this 25.69 right here. And I'm looking for this to come lower. I'm looking for these lows to get taken at 5.35. Let's see what else we got here. I want Disney, Russell, good for me. Yesterday I wrote all the psychology section you have on paper, and I'm going to read it every morning till I become IT. Good. I put it on there specifically for you, so because you had that question yesterday. So follow those psychological discipline rules. Yep, I've gotten burned on those moves before. I'm sitting my stop here now. It's a small little pop. Whatever. I'm gonna wait for the rest of it now and wait for another setup. Came right to the low. if it didn't run through it. So it just created that equal low. That's where you get rejection, pay yourself at rejection blocks. Comes in handy. So I could have paid myself right there instead of right there. Reverse. I want to see if this actually continues to go back into that range now. Back into this order box old low. The new day opening gap, or this regular trading hour. Sorry, initial presentation. Are you in this with live money, Chris? You better hope this level holds. Right now you're between here and here. 50% of that range. I don't know why you're still putting live money in the chart, but whatever. You be you, man. What's your setup in Bitcoin, Chris? Like, what's your clean setup that you're sure it's going to go higher? And where's your fail safe? Where's your, all those principles that you put down on paper? Read them and see, are you engaging in the very thing that was mentioned? Do you have a disciplined trade setup? Because if you don't, and you're just hoping it gets up here, yeah, you better hope that holds. And then your line in the sand is this mean threshold. Inside that range, you've got this box here. You've already come back into that. So now you've run above this one. You want to see that hold and start running for these equal highs. I'm not on Bitcoin. I'm on Caspa and meme coins. If Bitcoin gets higher by hoping, then altcoins usually run higher. Wow. All right. Well, good luck with that. We finally ran the lows. Liquidity has been run here, so we still haven't traded below that yet. That's right. Operative word is hoping. My hunch is a terrible strategy, by the way, is that whatever they do with interest rates today causes the markets and EU, GU to go higher. That's like no chance that they lower rates. Some money on hunches. If they lower rates, then market will dump. Yeah, if interest rates go up, it affects the market. The markets tend to go down when interest rates go up. But when interest rates go down, these guys love this. Markets love that. All right. So look for this to close below here in this hour. And then you've got the 9-10 turn. So my concern is that if we have a 9-10 turn here, that if 9 continues down, 10, all the time we've got a continuation, just follow through with that. But I'm looking for any opportunity to see a reversal here now. The next hour. Hmm. We've got another 15 minutes. We take out this low, drop below it, come back up inside it. Mean threshold. Now I want to see us get above here. If that's the turn into this level here, consequent encroachment's been hit. No, it doesn't. It's in this consolidation and we haven't broken that level yet. So it's not for me right now, Russell. 72.35. You're looking for a run down here. We've got equal lows here. And see how we've come into this reversal here? We've traded her up, come back down right inside it and hit it on a close. So we haven't broken below this. And then we run back up into this order block breaker right here. Hold, hold, hold. It just keeps holding off of the breaker. And then you get the change in direction here. There's a small little imbalance right there. You trade back up inside it here. And now you've got to get through this level. Otherwise, we're just banging around inside here right now from here to here. So have a good look at those, Russell. Like, look at boxing. That's the boxing going on right now. Inside this range. I like the fact we've wicked through here already, but you really want to see it close below this level for this range to extend. And then you're hoping the next level it closes below is here so that you can say, no, we're going to reach for this level here and use these equal lows as support to go lower. Don't forget that's hourly candles, so you can see this run up in here one more time at 10 o'clock. Take out these relative equal highs here and then reverse. But yeah, you're still inside this range here, so I wouldn't touch it yet. $21,430 is 50% of the range. That'll bring us right back to these old highs here too. We have these new week and new day opening gaps here. We're right in the middle of all that lot. Interestingly enough, between these two, this new week opening gap and this new day opening gap, the midpoint or the event horizon between those two lines up with 50% of that range. So we'll see if we can get back down there. We'll see if this gets broken here on a close. Agreed. If we can come back into this now and find support. I'm looking for a further rundown today. 9 more minutes. It's interesting. Yesterday we broke 1,120 people in our, and then somebody left and put me back down, back down to 119 again. I think we've gained 3 people this month. 3 people. Y'all saw that 1 hour bullish fair value gap? Yep. That's the reversal. And then we've got this here inside this range. The important thing, Hans, it doesn't matter if I have 1 million people, just the loyal people that enjoy the show. I understand people aren't going to stay here forever. You can learn something, you move on, and it makes you a better trader. I'm happy for you. If this is not your style, and you find something that works for you, I'm happy for you. I understand it's like, it's a pit stop for some people. It's a roadside pull out. That's fine. I want y'all to, it'd be a fine for y'all to move on and do your own thing. I like the idea of building relationships, making friends from all around the world, and kind of sharing a common love for trading. And if we can meet up one day, then that's great. To share fellowship and have a laugh and talk about how the markets have affected our lives in a positive way, how we've been able to affect the lives of other people. You know, that's my selfish goal for this whole thing. I want to see you all succeed, and yet I'd love to meet up with you all and talk about this stuff and say how well has it worked for you. That's my selfish dream. So keep your eye on this little level right here, and then 50% is just above you here. Not that that's a big trade or a trade you should take, but just kind of keep that in mind when you're looking at that level here. Have you guys noticed this? And this is not like a trading strategy, but it's something I've kind of noticed. If we get situations like this, we have a bull candle coming down or a bear candle coming down, And this is the level we want to see get taken. And right now, present, we're actually below that level. And if you see it tap back up into this, anywhere inside here, so look where that lines up right here, inside this level, that even when this candle is forming and it's not finished forming yet, it comes down, taps that. You want to see it extend, and you've got more objective downside, and you see any retracement back into here, that's a potential for continuation. So I'm just playing with theory here. That's all. Just playing with an idea. So I want to see if this actually, which is a retap of that level right there, if that holds and we continue trading lower. And right now we're not going lower. So you get the whole candle. Mind you, that would take you all the way back into 50% of that range. 50% of the range is right here, which is that mean threshold of that candle. So we'll see if that holds. Because now I'm in this reverse going this way. And anyway, just something I've been thinking about as I watch the candles paint. Are we using this breaker over here beforehand, or do we wait for the candle to finish and then it still it finally uses it now, or it's activated the moment we get below it? So while this candle is painting, it's now an active candle that can be used. That's just my theory anyway. Must be FOMC day. I'm still learning, but nice to have a great mentor such as you. Thanks for what you're doing. Abs, you guys are my mentors, man. I never considered myself a mentor. Just crazy about price action. If you guys can learn from it, man, I'm happy for you. If you can make it work for you, like Hadi makes it work, he's got that one thing, the edge on a lot of people, and he's got discipline. He's got that ability to be able to recognize his opening, wait for it, hit it, and have a trade plan and follow his freaking rules. That's his discipline. That's what makes him good at what he's doing. He's taking these principles and he's applying solid trade models to it. And it's working. It's working for him. Interesting. Where is your MSS for the 1 hour chart? The 1 hour chart right here. If we break below this right here, and we can trade back into this or even that candle, then I would have a stop loss just sitting above here. I wouldn't want to see it retap this. You've already come back inside that, so I'd like to see this breaker act as support to come lower. And here's your change in direction right now, and we have not traded above it yet. So all the time we're just tapping this and want to see that come lower. And we're coming up for 10 o'clock. So 9, 10 turns. So there's your 9 and then 10 turns. So if we can see this come down here, we may see a reversal. And if we get above, no, you don't want to see us get above here. If that decides to go higher, and we take out the premium array inside this range, here's the discount array, there's your premium array. That is right into that reverse, right into this check one more time and go lower. You've got this breaker here takes out these highs, which is a return back into that initial presentation. Lots of ideas. So many different ways to play it, right? So there's the close below. We come back, give it a tap. Now let me see this keep coming lower now. There's your first, second, third. I wouldn't want to see, I'd like to see that stay open now. That piece. I'm short off there. I'll put it. I'll do one short off there. I just want to put my stop loss here, there. I'm watching this level here. If this closes, I don't even like to see it. I want to see it just tap it and go. If I close above here, I'll close that trade out. So that's where I'm going to be. I don't want to see it get above. Yeah. It's above there. We could be running back into this level here now. So watch 50% of the range. So you see how I'm kind of bouncing between different ideas, and it's making me indecisive. It's making me second guess myself. So we got to recognize that and say, I'll wait for it to get back below here. If I'm right, then we did not break this high with a body. So I'm looking for this level here to get taken. That's the indecision, right? That's like, I can argue both sides of that. And that's where you're going to get beat up in that scenario for sure. So now we've traded above this level. We're coming back inside it. So now you expect to see this go higher. And on the hourly, you've come back into that order block, and now you want to see it go lower. So one says, I want to go higher, and you've hit the 50% of the range already, and you've had a nice reaction off of it. So unless we close below this level right here with a little wiggle room, you want to come back inside it. Inside this one, taking that high here. Not clean price action, hey? That little bit of indecision just cost me a little bit of trade that makes some money up $8, $8.08 because of that indecision. So again, when you get into this kind of situation like Russell, Chris, right now, my mindset is waffling back and forth. So until it's clean, you got to stay out. You got to be disciplined enough to go, I can argue both sides of this, and there's no reason for me to want to jump on this and make a trade right away. So get yourself in a disciplined mindset and say, do I want to be trading in between? I'm going to catch this now short because there's this urge to actually stay on the horse and that you should be paying money to stay on the horse. Just enjoy the ride right now. Wait for something clean to set up. I've got the 9-10 turn on my mind. I've got this reversal. I've got this midpoint. I've got this objective up here. I've got this objective down here. So my mind is kind of bouncing around between multiple different ways, and that's not a clean mindset, not a smooth entry. It's a cluttered mind. So don't engage. Wait for it to go, oh, okay, now it's giving me something clean. There's no reason to have to throw away your money on a possibility that's going to go one way or another. Ed, good morning. Just joined and thumbs up. We are targeting that fair value gap above. We'd have to get through the breaker. We'd have to get deep into that breaker. So for me, if we get through this mean threshold of this last little candle right here, if we start to really dig up into that, then looking for this guy right here. There's a small turn point. So that would be the next one. I'd be aiming for the bottom of that at 580. See how we traded below this one? And then all we did was trade back into this discount portion here, which is another BISI. Hit that order block. And now we're back through this level on the upside. And now you want to see this continue push higher, equal highs. We're outside of this now. We traded above it, traded all the way back inside it, and went higher. We're at a 7 now. So now we're going into the squabblers. They're going to start. This would be like the 7, 8, 9, 9, 10 turn. Watch these candles now. Watch the little blue balls. This market's giving me blue balls everywhere. Here and here. So ideally, this is a nice little place to, on the hourly, to trade off of, to go short. So what sits up here? You got equal highs. I'd like to see that coming to here one more time. That'll put us into there to there. You got fair value gaps above you. We're over 50% now. Remove. So far it's saying go higher. So now you look for an opportunity for a reverse on the 1 minute chart, looking for a reversal to go lower. So you're looking for a clean reverse. And you're looking for it around the 10 silver bullet time. There's the 10:01. We ran through it. So if that was a silver bullet to short, didn't work. There's the 9. And again, see how it's choppy here? You want something clean for a nice clean setup. I'm looking for anywhere inside here now. So you've got from this low to that low there. That whole range for a decent reversal on this level here. For the higher time frame reversal we're expecting, we're looking for lower time frame to confirm that. Get a continuation, and then you say, now I'm in sync with what I want to see on the higher time frames. And 15-minute chart, look at this here. 15-minute will bring us right back up into here. So that will bring us right back into that opening, midnight open range. and abs. You know what I'm talking about. That puts us right back into this that's our it's a 9-10 turn. This could be the 10. Then you go into the old 12 o'clock. Or the 12. That's the 9. 10 there. 11. This is 12. Little tiny ones here. Now that that 10 is turned, it's taking these. Oh, it hasn't taken the highs. It's made relative equal highs. There's the 12. Let's see if we get the squabblers the afternoon, the 16, 17, 18, 19 candles giving us our new high back into here. Just to rebalance this candle. Right here, order block. Is this going to take us lower? Trade below it on the downside, return back to it here. So there's the return to it right there. Now I want to see if this starts rejecting that and starts coming lower. You're right up inside here. So you see how if you're jumping on this all the time looking for this to say, I want to go lower, I want to go higher, lower, higher, lower, you're going to get beat up in this whole consolidation. So wait for the structure break to the downside or structure break to the upside. This consolidation will beat you up. And in the small ranges that you're inside, you look for premium and discount arrays. They're literally overlapping each other here. So your premium is right here at 548 and 553, and your discount is right down here at 522. Nine, 10 turn, 12 turn. Time in the bottle, my friends. Gotta love it. Market opening gap above us, but I think we've hit the bottom of the ESNQ now. What's your view on oil? What's my view on oil? Ooh. See, that's why we didn't want to see us go lower yet. See how we have not broken out of here? So Paulette, all we've done here now is we've talked about the premium array. Last hour we were talking about the premium array and this discount. So you've just gone from box to box. So there's your premium array has been hit. I like this little snap off of that, but you really got to get below here. So 73.21, Paulette, you want to see a close below that for a continuation on the downside. And then you're looking for a close below 72.91. And once you get that, then you can think about range extension. Otherwise, those are my two key levels that I'm looking for right now. There might even be one little tiny guy at 73.09 as well, which is what is hit it. You're stuck inside that new week opening gap and this 1 hour. Oops. That 1 hour Zibby. This looks good. Nice little stop run. Reverse. Wait for this order block to get taken. It does. I'd like to see it come back into there. Back to this breaker. It takes out these lows. We're bouncing off of that. So I'd like to see this come back into here first before going lower. So I'd be looking for something like this. And then you'd be looking for somewhere in here, and you want to see this get taken on the downside. Yeah, see it's hit this order block here already. So you want to see this now start digging into the high of that one, then the mean threshold of this one, again here. There, if you want to stay going higher. And then once that gives way, then you're looking for this down here as your discount array for box to box. We haven't been able to get to this box here yet, but this order block here, I'd like to see us come back into that. We've got this, see how the body, this is the example I've given you before, that if you have candles that keep rushing through and the next candle doesn't come back to fill it, and this next one runs through the next one, this is the one you keep looking for. So always look for the one that it's presently taking out, as long as it's in the premium that you want to get to the discount. And it's right here. You see that, how you traded below it? You came back up inside it right here. Continue lower. Now you're looking for this discount, bang, you hit the discount box there. So each one of these that runs through the array, if we don't, the next candle doesn't come back to it, whatever one it takes out next is the one that you want to stay active on. Again, as long as it's in the premium portion, sell at a discount. Go back and look through your charts. You'll see how they become important. Like here's another example. See how this one here gets ripped through. That one gets ripped through. And then you go, great. Then we got this one here. It gets ripped through. And then where does it come back to? That one. See, all of those never got hit because we just kept ripping through them. But when it finally does come back to one, you want to see that one right here. That breaker that takes out all this lot here. Or these little swings anyway. So you're back into that little fella right there. That's what you want to look for. Anytime you see these rushes through each one of these arrays, if they don't come back and get retagged with the next candle, whatever's the last one that they come back to. So if it rips through that one, you say, okay, no, that's my level. But look at where you're at right here. If you missed, like for here, it went through it, came all the way back. And so you're in a premium level. You want to get to a discount, premium discount box, right? In the larger range. So here you had that one. So you're in a nice little premium. Run down. As soon as you get to 50%, move your stop loss to break even, take half your trade off, and wait for it to hit here. If it hits there, take a big chunk of your trade off, move to 62, whatever that reversal range is. let me show you what I mean. So there's 50, you take off half your trade, get to 62, take off another 10% of your trade, hit 70%, take off another portion. You didn't quite get 75, but it came back to 62, so you're taking out here. So you've moved to 62%. That trade is done. Now you wait for market structure break to the downside, and then you can get back in sync with the market. Because if it retraces all the way back up here, you get to start that whole trade over again. Because these haven't been hit yet, so the likelihood of them coming back into them before taking out that low is high for me. So this is where you kind of need to watch price now that it's come down there really quickly. Are you going to get a measure of retracement here and get like this little head and shoulders pattern that retail likes to look for? Here's your reason why you want to see that little head popping up here. So you get, or shoulder, another shoulder coming back up before running lower. Not that I teach head and shoulder patterns, but watch, see if a little shoulder pops up in here. Chris, Ali, patience. This game isn't about making money, it's about not losing it. If you can prevent losses and wait for the quality setups, you'll make more money than you thought was possible. So true, Chris. So true. We have in our little quotes, motivational quotes section in our channel, Warren Buffett said that the markets are made so to give, I'm paraphrasing here, give the money to the patient people and take away from the impatient people. That's the whole setup. It's designed to take money away from the impatience and give it to the patient. Just over 50% of the range, reversal. Great. Wow, price action way over my pay grade. Short. 1, 2, 3. Note. Not. Note. And we open inside the previous day's range. I thought price action. Thanks. It's tough price action. Out. Yeah, that's a consolidation. I'm not even going to touch that. Patience, man. ThetaWave mindset. Get yourself calm. Wait for your opportunity. If you get a blast off candle, check yourself on that. Is that excitement for you? Or you say, oh, good, now we're finally busted out of here. What are we going to do here? How are we going to act? Where's my next setup? When it makes those moves, what's your setup on that big move that you're anticipating? Either displacement down, what's your move? What's your setup? If it displaces up, what's your setup? Not trying to jump on and chase the dragon here. We're in a consolidated market. So we know when we hit consolidation, what do we have next? Displacement. How are you doing today, Paulette? I didn't see a sneak in there. Good morning, good morning. I'm up to $9.34 today. Woohoo! I can buy a coffee. Look at these key levels just turning. So where are we at now? 27 candle. Waiting for the 27 to give us something. Now, if you trust your arrays, and you say, I'm going to trust that, I'm just going to roll with it, I'm going to stay in it and weather all this crap in here, then this doesn't look so bad when you're looking at this chart. Because if you close out your charts and I say I'm focusing on that only, I'm in my trade there for short, and I don't care what's going on in here right now. I want to keep my short, and I'm heading for my discount array down here. And you say, I'll come back in a few hours and see where we're at, and you won't even get yourself all stressed out over this stuff because you're trading on a different time frame. As soon as it hits that level, I'm out. $20. Takes this low, come back into it, $20. Now I want to see if this comes back into this order block here now. We want to see this start busting through here now too. There's the 27. So 30.32 would be a nice little retracement back inside this range here. It's interesting how 27 candle was the one that nailed that spot right there. That candle's high is 479. This candle's low at 27. $480. So half a handle shy of taking that. This candle's high though is 481. This is 480. So it split the difference between that high and that high. So watch your time in a bottle now. So 30.32. Look at this small little range right here. I'm trying to find something in here that give us there to there. Here's your 30. Just makes a little high here. Let's use time in a bottle testing here, not trading it or anything, just kind of test it out. So there's your 30.32. So I'd like to see if this level gets up into, is this like an immediate rebalance? There's your 50% of your range right there. 62% puts you right there. So there's a discount section. get back into that imbalance there. I did take a short right here off of 32, and now I'm just going to move that to break even just because I don't want to. So I'm literally sitting on top of myself here because I've got this reversal happening, so I don't want to see this come back through here. So I'm just looking at this as 50% continuation. I want to see it get through here now, so I got a short there, and if it comes back and takes me out, I'm at now $3 or something. I just got the trade is covered, and I'm just hoping that that holds. Now hoping I want that to hold, and I want to see this level here get taken on the downside, so we can see this continue running lower and take out this. So I want to see that give way. So it's come right back to it. So we've got traded above it, we've come back into it. So if we start to run back through this candle, it hasn't been validated yet for me on the downside. So this is the 32 candle. It can make a high. I close that out. It's over the Ming threshold, so $12 or something. So now 32, we get one more little dig into here, where this yellow box here, and 62% will put you right in there. So let's see what we get there, because then you got the 38. So we got the crazy Ivan going on here now, and then a reverse. So this is the bottom of the hour, that whole crazy Ivan thing, the look back, and then the continuation. If he sees you and takes you out on this candle here on the upside, you close above that, then we're looking for a run back into that range, taking out these equal highs. That's the way to do it. Evan, just paper trade this. Don't even click your buttons. Don't even click the button. There's that little pop into that. I like that. That's the 62% range. Now I want to see this roll over. And we want to come back through here and use this for support to go lower. If we get back through 529, then I have the top of the yellow box. That's all I got left. I'm just trying to stay on the horse here right now. There's 62%, so I'd like to see this to be optimum trade entry reversal, but we'd have to get back through this box down here. So if you draw your boxes out, and I'm just trying to play time in a bottle here for you guys as well. So here's your 27, 30, 32. So 36, 38 level. I want to see if that gives us our reversal for continuation on the downside. So see how this low is taken, creates a reversal. You trade it above it, you come back inside it. So that was my concern of whether or not we'd come back through this, because that was the short. And then you've got this one here. So you've hit the short and then retrace back into the discount. And now you're looking for a run back up. So you're still inside this range. And we want to see if we get back through this little premium array right here. And then this immediate rebalance. And then there's a little tiny guy up in here. Fair value gap. I cut through all this stuff. All I'm looking for is inversions inside ranges. So from high to low, I look for what's in a discount. Where's an inversion point that is inside that range, cutting through all this mess what key levels would I be looking for to key off of. So if you just draw them out and just say, are those bullshit levels that Darren's talking about there, or do they actually have some sort of purpose? Right there. Like from a premium perspective, do we act on these from here to here? That little fella there. Those are the, if you look at the premium, this is just how I'm looking at it. Michael doesn't teach you this. Just some crazy ass thing I'm looking at. I could be totally wrong. But I look at all that range there and I cut through all the clutter and I go, what little range am I in? Is there anything inside here that supports a premium array? Well, we've got this little tiny fella right here. When you open it up, you'll see it right there. So we've hit that, and that's above 50%. So you've hit that one. Then you're back to this one and this one. It's all below 50%. Now I want to see, oh, sorry, that would be inside this range right here right now. See how they're above that level? 62% puts you right inside that little jobby right there. And inside the level that we want to see it break to the downside, come back up inside it to go lower. That's the level right there as well. And they overlap nicely. So now you want to see if this gets taken on the downside and continues going lower. If it does come higher, then I'm looking for the next premium inside that range would be this fella here and then that guy there. And if we start getting through that one, which is this big one, we find support of that, I expect to see the range extend. That's my ideas. So that's my narrative. Now let's just see if they manifest. So I've got my upside narrative and I have my downside narrative. And that's how I kind of working those out right now inside my head, inside that giant mess. That's what I'm looking for. And now you understand why it is I'm looking for that. Now let's see if any of that transpires at those key levels, not just some, I thought it was going to go higher, I thought it was going to go lower, so I picked both directions. I've given you the narrative behind where I expect it to bounce off of for those two scenarios. And if you're trading internal range liquidity right now, this would be here. And my next upside objective after 50% is the 62. After the 62, I'm looking right up here between 70 and 75. That would be actually the next one's right there, just above 70. And again, you're not trading it, you're just studying it. Trying to stay on the price and say, how's it moving? What levels are we keep bouncing off of here? Are we still, look at that. We keep bouncing off of that. So if we're suddenly going to shoot up to a premium array, what will be a logical level to reach for? So you'd say, yeah, this fair value gap above you. But the key levels inside that fair value gap, I'll be looking for some interesting levels in there. That one will be inside there. So if we're going to go lower, and again, hourly, you still want to go lower. Hourly, you ignore all this. You'd be like, I'll come back in an hour and I'll let you know how I'm doing. So you're already 66 handles from your entry point. If you were to just keep back off of this old low here inside that candle, you're already up 66 handles. And you're not sweating all this crap. You're just going, oh, okay, man, look, I only trade on an hour chart. It hits my level. My stop loss is quite high, or it's above one tick above that level. If we trade back that high, it's not what I'm looking for. I want this candle to provide support. That's my idea. So I'm going to go lower, and I'm looking for my discount array here when it gets down there, 350 something or 389. I'm done for the day. Have a nice day. I'll come back after lunch, after a golf game, whatever. See how we hit the very bottom of that? Right on a 40 turn. So I got a 42. So you come all the way back down into that discount array again. So you came up, down, up into the premium, all the way down into the discount. And now you want to see it get above premium again, no? Because there's nothing in here. Yeah, I suppose here. We're inside this last breaker, inside this little run above here. There's 42. Watch where it closes. 2, there. Below, up, down. See that? That's the narrative I gave you for the downside. Boop. Now you want to see it extend the range. You want to see this low get taken out now. You see how that's continuing to transpire in spite of all this shit here? See how the range extended now? Am I moving into profit? I took my short right there. Moving into, it's a zero stress trade now, so I'll let that ride. Now I want to see it come back down into this discount rate. Now that we're through that level, I want to see your buck get all the way back down there. Leave all this open now. You can do institutional order flow entry deal if you want. I don't even want to see that touched. I want to just see that take off now. On a practice. You're still hitting that button, Chris. You got to sit by and just don't hit it. Right now, you're still on an adrenaline high. You're hitting that button. You need the rush. You can't hit the button, man. Stop hitting the button. Just watch it. Just let that whole emotion go about being right. And just watch it unfold. That's just my advice, whatever. You be you, man. You still chasing that, the rush, being right, or being in a trade, even if it's a paper trade, getting the rush to be right. You got to not hit the button and be right and be okay with that. And then worry about all the thoughts that go through your head. I could have made money on that. I could have made money on that. Had I traded that, I would have made money. Damn it, I should have taken that. All that shit is just the wrong thinking. Wrong thinking. I'd like to see it come back to this low now that we've come through the consequent encroachment of this. %50 of the wick. Okay, I'll go with 50% of the wick. That's fine. On a 45, 50, 52 now. Got to return right back in the mean threshold of a 15-minute candle. Lighter buck now. Next stop is 45 or 44.50. And only 5 trades today. Nothing at all. Okay. Nothing at all. 0. Do not even touch that. That would be my advice to you. Don't even touch your trade button. It's not about engaging the market. It's about watching it and studying yourself and how you're acting, how you're thinking, how you're feeling every time it goes in the direction you want it to go. Do you have those thoughts of, oh, I should have, or do you just go, excellent, that is moving exactly the way I want it to move? And I'm okay with letting this do this all day long. And you just keep doing that for today, tomorrow, all week, all next week, the next week, and the next month, all the way through till September. I bet you can't do it. I bet you can't do it. You need 6 months of just nailing this thing down regularly till it gets so boring you just go, yeah, that's exactly where I wanted it to go. Now, trade some demo account and practice it on a demo account. Now let's start to engage, learning how to engage yourself in the market. Right now, you're just chasing adrenaline, man. So I'm obviously out of that. That came back for my stop. So reverse. So if you're short on there, you're about to take a hit. And you go, oh, I should have listened. But again, you got the urge, you got to be, I got to click that button, right? So now you've got a body traded above this. You come back, found support at it, and we're going higher. And if you don't recognize that that was a turn and you're still short, you don't know, you're not studying the market, man. You're just not studying it. So you want to see this break this high now, get a little structure break, come back. And I think this is what Derek was talking about, T trades. There was a guy on Trading Nut. I don't know if any of you guys know about Trading Nut. He's a guy that he builds bots, and I was building bots with this guy for a couple of years. We were I gave him an idea of a trade, so he helped build this bot. Like you subscribe to his channel and you build these bots. And I think T trades, this one Derek's talking about, is where you break a low, and then, or you see this low get taken, and then if we start to trade back up above a structure, the very first fair value gap that you come back to on this side, you start to go long on. I think that's the one Derek was talking about. And that's T trades. There's some other guy, I don't know if it was T trades that went on his channel and talked about this specific setup that he'd made over 300 grand on it. But I think it's the same one Derek's talking about, whereas if you trade lower and you break market structure, the very first fair value gap you come to on this side, not this side, you go higher. And he catches it for a killer run. I actually started very seriously yesterday and I wrote down all the notes from the psychology section on Telegram. But you're not following them. You're not following them. If you're engaging in the market, you do not have a solid setup yet. You said that was lower. Look, it's changed on you. And if your stop loss is sitting up here, you're getting beat because you didn't recognize this. That's why you should not be trading right now. That's just your Uncle Darren. It comes from love, man. I'm not trying to beat you up. I'm just saying you are not ready to be trading in the market right now. So stay the hell out of it and paper trade. Paper means on paper, not in here. Write it down. Write your numbers down. Go in here, draw boxes where you want to see support levels. Name the levels. Go back over, research Michael's stuff. What's this side called right here? What's that called? What's this called? What are the levels in those? What are the key levels that are important to you inside each one of those? If you can name them inside that, what kind of things? What's that called from there to there? What's that called? What's this? You got to be able to name all that stuff. Where am I inside the whole range? Where's my fib tool go? You have to have a structured setup on where you want price to go to. See how this is finding support off this level inside the breaker? Now you want to see if this comes higher, takes this out, and we're starting to run up. We're in the premium portion of this. Now we've taken this out. We're looking for a premium run now. Look for these little fellas up here. Yeah, he's not there yet, Edmund. He can't, his button trigger is an emotional trigger for him. Not even paper trading that. Just draw boxes on the chart like this and don't engage the market. Just don't even click the buy sell buttons. Go over here, buy sell button, get rid of the damn thing right now. Don't even get tempted to touch it. Just draw out your boxes and just say, where am I finding my support levels and why is this breaker so important? I want to see its mean threshold hold price. I don't want to see a body get through that at all. And I want to see this go higher. Breaks above it. Here's your reversal here. Body trades above it, comes back. It gives you a nice perfect entry right there for a long. Not that you would take it. You just go, okay, that's a nice entry point there. Now, if I can get above this would be great, and then come back and use it for support. I'd like to go higher. There you go. Trades above it, comes back in it, finds support, and wants to go higher. You take out the high right there, and you go, good, I'd pay myself there. I like that. Where's my next objective? I would move my stop loss now into break even, and I would wait, because I know I don't want to see this get revisited here. I want to see this old high get revisited, and I want to see it start pushing up for this premium array, which we're in right now. That premium box we picked out on a higher time frame. And I want to see if these two little fellas here get some support. This now candle has been validated. I want to see if this mean threshold holds price now. I don't want to see it eat through that at all. So watch where that closes. And then you want to see it start inching higher. No one's hitting any buttons. You're just kind of looking at price, studying it. Don't get yourself like 6 months from now doing this, or 6 months. I can't do that. That would drive me nuts. That's why it's a marathon. That's why it's a marathon. You study, study, study. And then one day you enter a race, a small little race. Highs taken, Nothing in here except right there. So now if we trade below here, let's see where you're looking now. So you see this mean threshold's been taken. We've come back inside the mean threshold. I want to see this breaker hold price again. So you take this breaker, you draw it out in price. And you say, I want Mr. Breaker. And I want to see him hold price. And he's not. Reverse, high taken. You look for your first reverse opportunity. As soon as you see a high taken, reverse. Now you're through it. You're through the breaker. Bye-bye breaker. Now you want to see this breaker act as a retap on the other side to come back into this discount array. And you're already in the discount portion already. You pull your fib tool from here to here. You're already over 50%. You want to see this and this level now provide support. See how we've got one candle went through 1, 2. It's coming back inside this one. I want to see this hold price now and not even come back into that. Leave that open. Remember I was telling you about if one candle goes through 1, 2 of them. We're right in there right now. So I want to see this keep coming lower through here. Remove. And you're already in the discount. So if it does rip through all of this, then you want to see this candle here, this last up close candle, get taken, its mean threshold, get taken, and then continue pushing for those little looky-loos above you again. We're through it. Let's go. So I want to see that come lower. Inside here, you popped above it. Watch here. See between discount and premium. You just drop below the 50% range here. We've now, this is that whole theory we're talking about with once you trade through the breaker and come back into the breaker, you expect to see that come lower. So I don't want to see this give way now. No, I'm not trading a micro. He's just not there, Ed. Trading a micro, all you're doing is just asking for a little fix. It's like a drug addict saying, well, I'll just try pot today because it's not really a drug. Any clicking of the button is not what he needs to do. That's just my opinion. From what he's told me and what we've talked about, that's not, you're not even so much as a clicking paper, no value money, because he gets a significant emotional response from being in the market. It's in a dopamine hit, and that is not where you want to be. Clicking markets, clicking buy and sell buttons for dopamine hits, just to be right. These mental changes take time to change in your mind, even if you're taking it seriously. It doesn't just happen in a few days of reading psychological ideas from there. So true. So true. That just tells you, oh, if it resonates with the psychology part, if that resonates with you, you go, that's just one of those little, maybe I need to research this a bit more. Maybe I need to do a lot of self-reflection first before I get involved in the market, because I know what my problem is. If that resonates with you and you go, yeah, I do that. Yep, that makes sense to me. Go over each one of those principles and you tick them off. You put a little check mark there. You say, what's my first principle? Go over that plan, a well thought out, constructed plan. What's my well thought out, constructed plan? It's not just saying, oh, this looks like it's going to go here. It's, I want to see this get taken to the upside, come back, find support at it, and I want to see it run higher. That's my swing. There's my reversal. Comes back inside it. Either we're going to extend lower through it. So create your narrative on long and short. Where's my fail safe? Where is my linchpin that holds this whole trade in place? It needs to hold. If I'm going to go lower, I want to see this get broken to the downside, and that linchpin needs to hold price. There's my premium array inside this whole range here. That's the premium. If I break that to the upside and I get my breaker taken again, then I'm looking for more upside, and that's the objective I'm looking for. And it's sloppy price action, so up to you to engage whether or not. But you need to have a well thought out plan, and just review that every day for the next 2 months, 3 months, 1 month, whatever you want. Just say, this month I'm only going to look at the charts and I'm going to construct based on the discipline. I'm going to construct a plan. Once you got that plan, you say, yeah, that plan's executing every single time. I'm not getting caught up in these big takeaways and I want to chase price. I don't want to be like a cat. As soon as I see that thing come by me, I want to chase after it. You just wait for your setup and you see it forming. You've got that first one. Tick. You check it off. Go to your next one. Tick. And analyze everything about yourself and then tick that box. Otherwise, you're going to be a victim of giving all your money to those guys who are disciplined enough to wait for you. What is a mean threshold? Mean threshold is, this is my mean threshold. And I know Michael's talked about this in 2 different ways. That's the mean threshold right there of that candle. So that breaker right now, it's that one that runs this high, takes this whole high out, takes this high, that high. This breaker, its mean threshold is the body and the 50% of that. That's what I hold as important. So some people go here and they go there to there, and they say that's the mean threshold. So 472. Sorry, was it 472? It was 473. So here, it's like one tick out if you use the whole thing just in that one. But sometimes you have these big ass wicks, like in this case here. Its mean threshold, if you did the whole thing, its mean threshold is the wick. That's not where I do it. I like to go here. I go, its mean threshold is right there. I know Michael's taught both methods, but back in the day, he taught us that method, and it was like golden nuggets. And now he switched it to the whole wick. I use that. I still stick with what he first taught me, and I don't care what anybody else says. I'm sticking with that. It works for me. And yeah, that's what I go with. So that's the mean threshold. It's the midpoint of the body of the candle, not the wicks. So I always look for that body, and I say, do we have a body getting through that level, or are we fixed on it? See how my finger's right on it? Right there, and see how the body froze right on it? The wicks did a bit of damage, but the body froze right on it. See how it freezes right on that mean point? Not if I did the mean threshold of this level from here to there. There's the 50%. I guess it makes me look like an idiot. If I take that one there, there's the mean threshold. They just hit the top of that, but the bodies are right on my one here. So that's the wick I give away. But anyway, that's what I'm looking for. If you took the whole thing, you do look even more bang on, but you also have the return to this level above us here, right on the money. Anyway, that's my mean threshold. You take from bottom to top, that's your thing. The mean threshold means the middle or the threshold of that candle. If it gets taken, then you look for here. See how this one here, mean threshold, doesn't get hit. I go to here. Let's see if that works again from here. Watch that level there. Makes me look like I have no idea what I'm doing. So you take the high to the low. Look at that, right on the midpoint of that high to the low. So you can see why he's talked about both of those. Okay. That makes me look totally bad. Let's look at this one here. I may have to switch up my plan. This right here. There's 50%. No. If I go from here to here, 50%. It ran all the way through that for the wick body. It hit the mean threshold of that one right on the money there after the fact. That's interesting. So anyway, that's hopefully you understand, Russell, what you can see the debate that goes on between those two levels though. When I started and struggled with overtrading, I identified that the feeling urging me overtrading was wanting to rush success. It's so true, so true. To help break this, I would study any time I started overtrading or feeling the need to trade that day, forcing setups, and it just happened and went lower. It just happened and went lower? Is this exactly what you anticipated, Chris? Is this running to your specifications? Is the chart moving exactly as you anticipated it on the whatever time frame you're trading on? I don't know if you're even trading on the same time frame I'm on. Yeah, any candle that you're looking at. So the mean threshold only applies to me when I'm looking at the last up close candle or the last down close candle or the breaker. If a breaker, its mean threshold becomes important to me. So if I take the body of that candle there to there, see how the mean threshold, when you trade through it, you come back up inside it to go lower. That's the mean threshold. I don't take every single candle unless I just take the mean threshold of the candle that's the most important one for me, and it's usually the highest candle, or you take the two together. Michael will talk about taking the high, the low, and finding the mean threshold of that, of both candles. I like to take the bodies of both candles and split the difference. And some people use the wicks, and I use the bodies. So sometimes it's two candles in one time, Chris. So you need to study that. Go back into his core content and study order blocks. See how we keep trading back through this breaker? You get above it, you think, okay, it's going to go higher now. Mean threshold holds, drops down below it. You come back inside it, drop down lower. We're still inside this box. So that large range there, you got equal highs above you. And what time are we trading into? 10 o'clock or 11 o'clock? Don't count these out yet. Yeah, watch the words. Just, and again, it's just wording, Chris, and I'm notoriously bad for, I call everything an imbalance, because to me it's either a volume imbalance, price imbalance, sell side imbalance, buy side inefficiency, or buy side a busy, buy side imbalance, sell side inefficiency. So I just call them imbalances. and you look for that. So that right there is consequent encroachment of this SIBI. You might call it the threshold, you might call it mean threshold, you might call it equilibrium. Michael calls it the consequent encroachment. So they all get different words, but they mean the midpoint. And see how that's not the midpoint of that whole candle? It's just the midpoint of the SIBI. So that's why they call it a consequent encroachment and not mean threshold or equilibrium, because it's not equilibrium between inside that candle. So that's where terminology is more important. Equilibrium would be part of a range. So, and equilibrium would be like from one high to one low. The equilibrium of that, or the mean, the center point would be the equilibrium of a range. So equilibrium is usually used for ranges. Terms like mean threshold is used inside a candle, and consequent encroachment is used for gaps, wicks, SIBIs, BISIs. $18 day. Sloppy $18 day. I can almost hear Chris's mind. That's so much of what I used to say when Michael used to say, you shouldn't be trading this. I'd be like, yeah, bullshit. I totally get this now. I get it. Yeah, so I see it. It's so obvious. You trade it, and something that rips against you. You go, oh, I shouldn't have traded that. I see the next one. And then all your money goes, and you go like, oh, I'll start another account. I'll start fresh. Oh, it feels good to see a nice fresh account again. And then you get, another 1,000 or another 5,000. You go, okay, now I started from scratch. This time I'm really going to focus on, I'm not going to trade anything yet. So you hold off for a little bit, and then all of a sudden you go, oh, I see it. And then you hit the trade button again, and you're like, oh, make a couple of bucks. Yeah. And then it turns against you. You go, oh, shit. You say, well, I'm still $4,500 up now. And it's 4,000. It's like, oh, shit. Now I'm down to $2,000. I lost a lot on that one. I over leveraged. Oh, I'm going to leverage back. I'm going to revenge trade that one. This time I'm really sure. And you end up getting into that. And the market, you can almost hear the market laughing at you. And you just keep beating yourself up. You go, oh, and then you put another fresh $1,000 in there. You start with a fresh thought that this time I'm really going to make it work. Now I've got a nice new $1,000 bill in there. I'm going to really give it a go now. And I'm going to take my time. And you hold off. And you'll find that after you've lost enough money, you hold off longer engaging the market. And you start to go, I'm fucking shit scared to go into a trade now. Because you get yourself so worked up about getting taken so many times, and you didn't give yourself an opportunity to identify what's going on in here before you identify what's going on in here. If you don't recognize that, you just keep fishing money into the market, and all those patient people just sit there and go, just wait, this kid's going to throw another $1,000 at this, and we'll just take his money. And I lost thousands. Way more than you lost, Chris. So you got to get in there. You got to have discipline, man. And that's when I said to myself, well, who am I arguing with here? Who am I fighting? It's me. It's my attitude that's wrong. I shouldn't be in this. And I still wrestle with it, man. You do that enough thousands of times, you're chasing every one of these. Yeah, I really see it's going to go here now. Oh, insane. Michael had done maybe 3 trades. In the time, I'd done over 3,000 trades. Back in 2016 into 2017, he says the markets back then were not acting the way he wanted them to. The pound hadn't decoupled, was not working in sync with what he wanted, not really decoupled, but wasn't working in sync with what he wanted to. So I was just buying and selling and buying and selling. And he was like, no, it's still not setting up nicely. And he waited, but I was over 3,000 trades. I would literally do dozens of trades a day, every day. Dozens and dozens and dozens of them. At the end of the day, I've got this massive sheet of trades that I've made and go, I've lost all my money, and go, why? I'll do it again. I'll put another $1,000 in. And I can just hear Michael kept saying, don't do it. Don't do it. Stay out of this. Study the price. And I'm like, no. I got this. I got this. So I understand where you're going, Chris. I get your feeling, man. The adrenaline rush is terrible. And that was a guy in his 50s doing that. So it's taken me a while to get that under control. There was times Michael would go on these rants, kind of like what I just did. He'd go on these rants and he'd tell me what I was thinking when I was thinking it. And I'd be like, I'd be looking around my room like, is he got a camera in here? Am I connected to the matrix? How does he know what I'm thinking? How does he know that that's exactly what I just said to myself? Because he'd said it too. He did it as well. Back in the 90s, he was chasing candles like crazy. He was making tons of money. And then all of a sudden he lost it all because he had no idea what the hell he was doing. He was just in a very fortunate time that markets were just booming and he couldn't go wrong, just buying it. Then when it turned on him, all his tools that he used, the retail tools, just failed him. And then he got to deal with all the psychology. And he talks about how many window frames he's had to refix and how many windows he's had to fix and how many monitors he's destroyed with a fist punch or thrown his monitor out the window of his house. Like there's some serious emotional issues he had to work through. Going to the hospital with major palpitations, anxiety, his eyes. There's so much that poor guy's been through. But he didn't get to be ICT because he just listened to some guy for 5 minutes on YouTube and it made sense. He spent, what is it? He said 6 years it took him before he started to get profitable, which is true. It's about 6 years. And that's back when he was young like you, Chris. Now you're probably saying, yeah, but I could do it in 3. Or I could do it in 3 months. Marathon. Pick your route. You don't just start running. You pick your route. Measure your distance. Get your shoes. Get your water. Get your plan. Have somebody meet you halfway. Give you fluids. You don't just go off and run and say, I'm going to do a marathon today. With no fluids, no shoes. I just get my flip-flops and I'm going for a run. Just because it feels like running. You plan it out. Anyway, let's go over and play with some other stuff here. Let's look at some of the other markets. I don't want to be sitting here lecturing you guys all day here. So reversal, see that right here? Pop back inside the same kind of order block we were seeing in NQ. See how you got the reversal? Trade back inside it. The continuation on the downside. ES. Reversal. Trade through it. Come back inside it. Would be inside this breaker here. Runs up, takes that high out. Into that continuation on the downside. It doesn't have a discount array here. You see that though? All you've got is just this old premium array that was created. You ran through it. You come back. We didn't even tap inside it. So my goal would be right here in this one, 60, 58. Let's see if you can get through that. If you can get through that and the mean threshold of that candle right there, that's 60, 40, around 60, 48. You can get through that on a close. Then you start looking for this one down here. Maybe just below that one here first. 60-20. You see how this candle here opened and came all the way back to 1, 2, 3. Those are the 3 levels you look for inside your candle. When you're coming back inside it, you want to say this has been an open buy side, no sell side delivery yet. So it comes back and it rebalances it. So that's an immediate rebalance. Comes back and it taps the old high here. So that's an important level for you, Chris. There, the close, and the mean threshold. Now it overlaps with this important breaker or important candle here. This bearish candle, it's high, it's open, its mean threshold are important levels. So it hit, see how it goes above, comes back, finds support here or right on the open, and then continues to go higher. So those are important levels that you're constantly looking for to see if you get support at them. So you're always comparing one order block to another. That's just basically looking at order blocks and see if they feed off of each other. And if they start to cut through them, you start to go, well, why is it cutting through that? What is it on the lower time frames that I've got? Is this a potential reversal? Then you start to dig down deeper and say, why would that mean threshold get taken to the downside? Well, I want to see this immediate rebalance this. So like, and this is a good example right here. See how we literally went, this one traded above here, created this little opening. Then you expect to see this one do this, come back, rebalance it. Or this one right here, rebalance it. It didn't rebalance it. It stopped where? Just shy of that 50% of that range from here to here. That's the 50% consequent encroachment level or mean threshold of that candle. It's now consequent encroachment of, you look for the consequent encroachment of that candle's low to that candle's high. Its consequent encroachment happens to be right on its mean threshold as well, which is in the middle of that candle and the middle of that little tiny fair value gap, BISI there. So important levels. Ripped all the way through it, filled it all the way up, came back into rebalance that level. That BISI all over again. Breaker. Copper. We're looking for copper to get back above here, weren't we? Well, that looks like it's doing exactly that. I want to see copper come back, give this a little kiss. It didn't. So you look for this level. Get a body going above it right there. Does it come back? That doesn't. So now we see this level. This is becoming important now. You shouldn't even see that come back in here. I'd like to see this. Now that that closes, I'd like to find some support right there at 828 to 827. I'd like to see it come back into that, find support there, and push higher. Not that you guys are into this copper by any chance, but well, it's not inversion yet. Oops, not a 1 minute either. It's a 1 hour fair value yet. Here's the mean threshold we're looking for in the down close candle. It's just bumping off that now. So we're going to watch to see how natural gas acts off of here. So see how inside that range, that's the last down close candle, Chris, and I'm looking for that to provide support. Its mean threshold is the line in the sand. If I start to trade through it and below it, I'm attacking this all in one candle. So that high, see how that high played an important role for a bit? It just came back up into that candle's low where it's open, and then start to drill through the next level right there, and then proceeded to run through into that mean threshold. So you want to see it just tap that and leave. You want to see it get out of dodge, but it's not. It's rolling over. So I'm thinking we're going to come back deeper into this gap down into here at 3.457 to 3.421 and see if we take these lows. Right through it. Look at that. See, we blasted through that level now. Now I want to see if this holds here and we use this. Now this becomes important for me. I like to see that whole box. Now, if you want a nice little discount or premium level, Scooby-Doo. Let's see this. Let's see if that holds price. We could come all the way back into this level and push higher for this in wheat. Soybeans, still looking for soybeans. I like the fact that we're getting above that 105.1 level. Stay above that. I like that. That'd be great. We've hit this upside objective here in sugar. I want to see us get on top of that now. Coffee. Where's coffee going? So if you're long on coffee, if you did take a long here and you did go long, you're just waiting for a reversal now. Because if this is making new highs, and I haven't checked, but let's have a look here. I don't know if this is an all-time high price for coffee. It looks like it is. Yeah. That's coffee making a new all-time high. So on that 1 minute chart or 1 hour chart, you wait for the reversal. You see this, how we've taken out these lows. You see this reversal, and we trade all the way back inside that reversal. See that? Right to the precision level, right there. Now, how many people were buying long off this reversal when you saw it doing this, going sideways forever? Your ideal entry is there. This is all psychology here. This is an hourly chart. How many of you could sit there and weather this for hours and hours? How many hours would it take before you start second guessing yourself? And then you see that big drop down. You're like, oh, I'm not long anymore. Crap, because all you want to do is enter in there. And it just wasn't getting out of there. Finally ran down and you go, oh, I'm on the wrong side of this. Well, if it trades below that on a close, you're looking for a range extension. It didn't. It just came back perfect fill. And you go, woo, now if we can get above that level there, that candle right there, we can get above that candle on a close. I want to see that candle provide, that whole candle provide support. It gets above it right there on a close, comes back, finds support at it, and it extends the range. They all go. So where's you just keep hunting for the next premium array, which is right up in here. You run all the way up inside that sucker right there. You have this reversal here. It trades below it, comes back all the way back up, precision. Like right there, bang, hits it, rejects off of it. So you're inside this range now. 50%, pull your fib tool, use your fib tool to manage that on the way down. And then what do? We return back into that order block again that we talked about. We don't want to see the mean threshold of that candle. Why is it an important level? Look at it. Tell me why it's not an important level. We want to see this one get taken, right? So watch. When I pull the mean threshold from here to here. Right. I'm doing it on the body, by the way. Look at that, 50%. Body hits it, stays on it. Little wick, little mohawks. Body stays right on it. Now let's just go back to that other method. See how accurate that is if you use the whole candle. No, you'd actually be below the 50%. You'd be below 50% of it. So I stick with the body, and you're right on the money there. See how it, and you cut through all this stuff. Anyway, you understand what I'm talking about. So you get that, and you get this little reversal right here. After taking out these lows, you pop above it, you come back inside it. Right there, see how you run above it, come back inside it, continuation to the upside. You run back into 50% of the range or more. Take your fib tool, and you'll see this happening over and over and over again. Right there. So there's 50%, 62%. We're just right on 62% retracement, and then you can continue on, extend the range. Back to 50% of that range again. Did we break that high? 50% of that range still. Larger range now. Sorry. From there to there. 50%. Right into the mean threshold of this candle again. Look at that. Right there. Bodies respect it. Order block above. Fair value gap. And this little gap right here. Keep your eyes on that little fella. So when you come back, look at this. And this is all hindsight, obviously, but this is what we're trying to show you guys every morning. See how the bodies come down right into the wicks of that. Find support. There's a new change in direction. You traded above it or opened above it. You come all the way back inside it. Just a little wick below, keeping this in mind as well. Wait for that order block to get taken to the upside. It does. Do you come back and tap it? Nope. Breakaway gap. Look for this guy over here now. So you take that little candle here from low to high and draw it out. When we get a body trade above it, come back into it, go long. Comes back into it one more time. Even though you get a reversal here, trades back into that objective. You want to see this hold price. So you're stuck between, is this going to come lower into this range? Do I reach for box to box trading? Not when you've got this fella here. So you want to see, did we lose the mean threshold of that candle? The last up close candle right here. Do I lose that mean threshold on a close? If I do, I start getting nervous and I say, oh, let's take both of those. And the mean threshold is right there. If I lose that on a close, then I'm looking for discount array here. Or this one would be the next one, then the discount array. But anyway, you get the point. Come back, find support at that. You get a new change in direction here. Body trades above it. You come back inside it. Extend the range. Reverse. You don't take it on the downside. You just come back and trade into it. Extend higher. And you're up here now. That's coffee. And you get a coffee with a perfect entry back here in January 8th. The beginning of the year. Wouldn't that be delicious? Anyway. Let's move on to something else. I just want to show you that everything, the same setup occurs in every asset class over and over and over again. Took out the high candle. So you see how this candle went through this level, but did not take out this level on a close. So we're expecting it to retrace back into the first available one, which is right here. There's the first, it looked perfect. And then it blasts through all of these, picks out the low. Discount array way over here, this little tiny fella, takes out those lows, runs through them. Mean threshold of this candle. Last down close candle. And what is it? It's a mitigation block. It's not a breaker. It's a mitigation because it does not take out an old high. It just runs up to here and then comes back down, creates another little low. This one is a breaker. Finds support in that and just waffles around in it for a while, drops down to mitigation, takes out, look where it freezes on. Mean threshold of that mitigation block. Takes out lows, gets a reversal. You trade above it, you don't get to come back down into it. So watch for this candle. You trade up through it and then take out the highs. What does it come back to? The old highs. Go higher. We haven't reached into this candle yet. So where are you reaching for? Premium array. Look at your range from here to here. Above 50% gets us right back into that little box here. Remember, we haven't tapped it. This was the only one we tapped into. This one here, we finally got to kick it right there. That one's been hit now. This one's been hit for the first time here. Now, if this is going to go heavy, I'd like to see that hit in here. And then drop. If you run through this level, watch these two. And if you clear that on the upside, look for the mean threshold of this candle. If you lose that, look for those highs again. Revisiting it. I thought this would come up in here. Just tap that, high. So we get that high, then this low, then this high. And then, just like working it on the way down and then finally give up the ghost. Reversal, you come into it here, you're going higher, so you're stuck inside this range right now between this reversal here and the premium array up top here. From there to there. Let me get that out of the way. That's box to box right now. This box. So you see how you traded above it? You come inside it. You've already hit the premium array, discount array, premium array. See how it acts inside here now. And then look for your mean threshold. And the last up close array is right there. So if you get through that one, reach for here, watch that, watch those key levels, Chris, put those on your chart and watch them. Watch how price acts on each one of these levels. Take this, divide it into quarters and see how it acts. Don't trade anything, just study it and watch where it goes. And if you can call the narrative, then start worrying about how you're going to trade it. Oh, I missed a lot of stuff. Craig's out of here a long time ago. Not gonna lie, I've broken 3 monitors with my fist. Oh, that's okay. I'm such a cheap guy. I was like, that's expensive. I don't want to hit that. I just didn't want to have to hook up more monitors and pay for busted ones. And as many times I've been I've slammed the lid on my laptop and looked at it and went, oh, did I just smash the glass? I didn't. I can't say I've ever punched a monitor, but I've come close. Wow, 100,000 K in losses. But I seriously, real deal, PTSD from my mistakes. I took years and almost $100,000 in losses before I got it. Ooh, Peter. That's painful. That's painful. Yeah, I think I lost $165,000 on a stock that a billionaire friend, or not a friend, but a billionaire that I knew was invested into. So I was like full on chucking my life savings into this thing, and it tanked. It tanked. It went right to zero, and I lost 165 grand. And that's when I knew nothing about markets. So it was big motivation for me to go, I got to get into managing my own money, because what I just did there was gut wrenching. So yeah, I've done some huge stocks losses in my time. So I feel your pain, Peter. Doing this, and I haven't lost 100 grand doing this kind of stuff, but I certainly I feel your pain. It literally, you can create some huge emotional trauma for yourself. And listen to what Peter's telling you, Chris. Listen, man. When you've burned that feeling of loss into your nervous system, it's very difficult to shake it. And I've got PTSD from 30 years of EMS. So it's very difficult to shake your nervous system responses to seeing something, your self-doubt, all that stuff you just reinforced with losses. Listen to what Peter's telling you, man. If you don't listen to me, listen to him. Now I'm starting over when trading ICT strategy. I will trade my main strategy, just ideal way back, out of my way back when I start to learn a new strat. Good. It's crazy people even have that much to start. Wow. Yeah, Russell, the market has humbled me into the ground and then some. Yeah, it humbles you and humbles you and humbles you. Yeah, I get it. And you still have money to trade. It was over several years I worked. Second job, kept funding 30K accounts. Yeah. That's the problem when you have a good job. I was working in the oil patch, so I was making lots of money. So throwing 10 grand at it, 5 grand at it, you'd be like, yeah. I remember doing a Tony Robbins thing one day. I just heard it on I heard him on a channel, and I was a big Tony Robbins fan back in the day. And I was like, oh, I want to go to Date with Destiny. Then he had this deal on. It was 10 grand. Put 10 grand on my Visa, and it was for 2 people. Didn't even have anybody to go with. And then Carla came along, and I gave it to Carla, and we went to Australia, flew out to Australia, and did Tony Robbins' Date with Destiny, which I wouldn't recommend, by the way. I wouldn't recommend that to anyone. The principle was nice, but talk about just trying to reach into your pocket. The moment you get there, they're reaching into your pocket for more money. Yeah, I was not impressed. Now I watch it every time I see his ad on there. So you don't miss out on this. Have you sat there? Have you felt like this? Yeah, he's doing all his NLP shit on you. Just trying to get your money. Anyway, I'm not bitter. It was interesting to watch a master NLP practitioner, because I did my master's and my instructor level in it. So to watch somebody as masterful as he is with manipulation and behavior modification, it's insane. Like, you break you down till 2 o'clock in the morning, you're dancing and you're just chanting all this shit till 2 in the morning, you're exhausted, and he's still got you 1,700 people pumped, and you're just exhausted, and he's wearing you down to hopefully under the guise of changing you for the good. And then they hit you. Buy this. Take this next course. Yeah. The visas are out. And I'm like, ugh, can't believe what's going on here. This is masterful marketing, but wrong. Wrong in so many ways. I'm small time from beginning, have lost 3K of my own money in 4 years. Well, then you're doing well. Also, if you can discipline yourself to trade micros, I went from micros to macros. Like, this is not moving enough. That's like $5. That's $20. I can't get rich on that. All these dreams. I want to take care of my family. I want to travel the world. I want to do all this stuff. I can't do that on $20. Kind of babbled out that I didn't catch the dip in the daily. Bummed out that I didn't catch the dip from the daily gap. That made a rejection block at 5 minutes. I'm glad that it was on the right side of the bias though. You're bummed out that you missed it? That's an important thing. That's a journal entry, man. Chris, listen to what God just said. I'm bummed out because I missed it. There's an emotional feeling to missing something. It's a 1 minute chart. It's a 1 hour chart. This is not the only move that happens this year, this week, today. No need to get bummed out. See how oil just sat in that freaking, how it's ripped back and forth inside this SIBI? Never really giving you a breakout in either direction. Lots of wicks doing some damage, trying to take suckers in for longs and shorts, but just sitting inside that range. You got to have patience to sit on oil right now and do nothing with it. Or trade internal range liquidity. And that's internal box to box. Write that down. God, make sure you write that down, journal that. You need to check that feeling. Being bummed out because you missed something, that's a negative emotion. And it's an emotion to something you saw in the market after the fact. You cannot beat yourself up on judging something you should have done when you have new information. You didn't take it. You didn't take it for a reason. Whether it's missing it or whatever, it doesn't matter. You'll find another one. When you're ready, it'll come to you. Patience, man, patience. It'll come. Peter, I'm on the same page, 25 years old, trying to learn from Darren, my uncle. I call him my uncle. Howdy, family. Hiron, good afternoon, good morning, whatever. Let's say where price wants to go and why. How about Bitcoin? I'm on a short from first presentation. Bitcoin. We want to see it get above, stay above here. And the fact that we keep coming back and revisiting it, for me, is not a good thing. So if we end up, and see how we're in the middle of this range, pull your fib tool. We call that what, Chris? Equilibrium. Look at, see, we're sitting right on equilibrium right now. Which way do you want it to go? I don't know. All I know is right now that premium array has been hit and this discount array is being hit multiple times, but it's holding. So you need to see it get above the premium array, which is 102,443 on a close to go up higher. And you need it to close below 101,458 on a close to aim for mean threshold. Well, actually, 101,190 and then 100, 773-ish, 779, 780, whatever. Midpoint of that candle. So that's the small range you're looking at. Right now, in the middle, got nothing for you. Yep, the market is the best teacher, but you have to learn your ego. Leave your ego at the door. Oh man, that's so true. Especially when your ego sits on your shoulder and says, hit the button, hit the button. revenge trade that. You know what you're doing. You know what you're doing. You can do it. Yeah, come on. We got this. We got this. Hit, double it down, baby. Double down. Don't take that crap. You're like, shut up. Get off my shoulder. You got no place in here. When I lost 25,000 on spy calls without knowing what I was doing, and I was copy trading and bought Prop 120 contracts, and boom, flushed Robin Hood down, didn't allow me to sell because order couldn't fill. Ouch. Wow, 150,000 all in, Darren. Yeah. Well, no, that was a build up over time. I just kept adding more and more and more and more. And I'd sold a house and got 75 grand, put that whole thing in it, threw it all in there, and it was gone. It was like, wow, all the years I had that house, because I used to be into real estate. I was a big real estate. I loved real estate, buying it. You could buy it, sell it at a higher price. I had no luck. They had no luck at all. I bought, they said real estate was just the best thing to invest in. I bought my first two houses in Winnipeg for 45, no, 50, 55 and $50,000 for the first two houses. 10 years later, sold them for 45 and 40. And then literally a year after I sold them, the markets, they boomed. They were over 250 grand. So you talk about missed opportunities. Ugh, I could write a book. I could write a book on missed opportunities. I worked a day job before the class, and went back to work, meat packing place. Oh man, I feel for you, man. I've done plastics factory. I remember sitting on a strip, or what do they call them, a splitter, and we just take these massive rolls of plastic. They put them on there, and they'd cut these rolls of plastic, and you take the plastic roll and you'd wrap it in plastic. You put plugs in the end of it. You put it in a cardboard box, you tape it down, you put labels on it, and then you do that all night. Do night shift, just taking a roll of plastic, wrap it in plastic, put it in a box, do that. And then when they say, we need more boxes, and you're like, I'll do it. I'll do it. I need something, anything other than this monotonous same thing over and over. So I'd run over and make boxes. And then people would yell at me. The boss would be like, what are you doing? That's enough boxes. I'd have this mountain of boxes. So I'd be like, just making up cardboard boxes, something different to do. Oh man, Peter, we've probably got so many stories. I used to be walking as a security guard in the dungeons of Health Sciences Center in Winnipeg, walking around during strikes. I've had so many jobs in my life. You'd have 2 or 3 of them at a time trying to make money. The good old days. How do you move from micros to real ones? Tape read gold. Equilibrium. I feel that yes, that is exactly what it is. I feel that if they want to flush lower, they will have to slowly get the highs. 920. Okay, so watch, Chris, that you say, yeah, I like this. I want to see them take these highs out, or I want to see them take these highs out. There's so many PD arrays it's got to go through to aim for that stuff in a 1-minute chart. You see how this is still panning out, still coming lower? And if we keep slowly grinding lower and lower and lower, the guy who's gone out golfing, the moment they bought that order block, he says, I'm going to walk away now. My stop loss will sit up here, whatever. And then I'll come back, and if I take the loss, that's my loss, and I'm out for the day. 1 trade, 1 kill. Meanwhile, we're all like, oh my God, price action's terrible. The guy's out enjoying golf right now. And if it rips back against him, maybe he checks his stocks on the second hole and goes, oh, okay, now I'm going to put my stop at break even. I'll let that run for today. Pay for my golf game maybe, and then I'll let it run. There's so many PD arrays. I see this as another common mistake people make is they aim for way too many PD arrays away. We're going for these lows. You don't know that. It's got to go through 50, 62, 70, optimum trade entry reversal. It's got to get through here. And then say, yeah, it's got to go there. You can't just say it's going to go there unless you're Michael and he knows for sure it's going there. But yeah, watch that you say it's got to get above a certain level. You don't know that yet. It's got to get above that mean threshold on a close and then start taking out the high. See how that mean threshold is closed? But this one and this one are higher. So look at the mean threshold here. That's literally went back into the rejection block and popped off it. So look at all these rejection blocks. You've heard me tell you in the past, pay yourself at rejection blocks. Rejection block goes lower. Rejection block goes lower. Rejection block goes lower. Crazy. Pay yourself. You'll see so many times this will happen and doesn't take out the high that you were looking for. Breaker. Reclaim, 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 reclaim. Go lower. Nobody's got above it. We traded below it again, and now we're doing was banging off of it. And now we're going to reach for the low mean threshold. We've now closed right on the mean threshold there. So right now, Chris, it's going against you. So you don't turn around after it's showed you a reversal and say, I knew it was going to go there. Because now you're just looking for confirmation. You haven't studied price action. You just hoped that it got there, but you had no proof. So that's why we're here, to try and teach you how to stay in price action and say, I don't know where it's going to go there. I don't know it's going to go there yet. It's got to, in order for it to go there, it's got to break through what? And then you watch the narrative unfold and you go, okay, good. It hit that. And it found support here. Good, good, good. When you get good enough at that, then you start to say, what if I put a paper trade on that? I'll put a line there. I used to do this. I used to take these lines and I do this. This is how you're going to practice, Chris. This is what your uncle's going to tell you. You go like this. Close your eyes and go. Just scroll back like that. And then you start right here. And you take some lines like this. This is how I practiced. Every weekend, every day when the markets are not running, I do this. I take 3, 4 lines, change the colors, whatever, make green ones, red ones, whatever you like. And I go, if I'm inside this range here right now, and I pull my fib tool from here to here, and I practice, and I go, if I'm inside here, I want to look for this order block. If I break through that, then I'm looking for this candle here. Now what I want to see is this reversal hold price, and I want to see this go higher. So if I was going to buy this, I'd want to buy it right there off that little puppy right there. I want to buy that there, and I have to keep in mind that this, if we trade back below this level, I'm looking for this down here. So my stop loss is going to sit right down in here. Oh no, it'd have to go down here, right there, below that guy there. Okay. Now that we've traded back above this, I want to see this provide support, and I want to reach for this little guy right up here, that premium array. So, and then I go over here and I go, click, bing, hits it, and I go, woohoo, I was right. Okay, so there's my entry, there's my exit inside that range. You see that? Right there. Sorry, the little X keeps popping up, but you'll see it right there at the bottom. That's the entrance, and that's the exit. And it hit it, and I go, great. That's how you practice it. And then you go, right, now it's done that, and it's reacted off of that. I want to see if it gets back through this level to aim for here. So I wait for a setup, or I wait for it to get above here to go higher or lower. So and then I look over here and I go, that one's been hit, that premium array inside this box to box trading, box to box has already been hit. So now I'm doing box to box. I'm inside this little range here now. If I can get through here, I'm inside this small range. I got to get up through here to go higher, and I got to get through here to go lower. And then I just go, so that's my narrative. And I do that, and then I go click, and I go, okay, it's still sitting in the middle of the range. I'll wait for the next one. This is my patience. I'm practicing patience. Oh, look at that. I'm getting up into my premium array. So now I want to see this break through here on a close. So you go patience, you wait. So I've got this high and that low. That's the range I'm playing in right now. I've already made my money in here. So I don't want to sit there waffling around in tons of different trades. I want to just watch it now and wait for my setup, like I would be if this was live. And then I would go like this, and I go, ooh, I got to wait another minute. Ooh, I got to wait another minute. Ooh, we have launch. We finally came back into, we've broke above this level. We run back. This level becomes important now because I ran above it. I come back inside that. Now you want to see it go higher and break through here. It's broken higher. Now I want to see it pop through here, come back, find support at that level. Or if it rolls over and comes back through this candle's low, I'm going to come back to that low. I'm inside that premium array or discount array here. So then you go, boop. Trades above it, comes back, finds support at that level. Now I want to see this start to go higher. I do not want to see that level get taken. So if you're going to go higher, this order block here now, you want to see it close above it. This is the support you wanted to get. Now you want to see that level right there go higher. Now you're inside it, right? Right inside that. You don't want to see it close lower than that. You want to see this little piece stay open. If you see this breakthrough here, you're back to the discount array again. So then you move your little sticks and say, that's my line in the sand. I don't want to see it come down lower than that. With the body closed, that is. Burr, burr, burr. Oh, looky. So that entrance you had there, that's your setup. And away you go. Now you've taken out this high, pay yourself. Take out that high, pay yourself. You're back into this little imbalance right here, pay yourself. Anyway, so that's how you practice. And then you just keep clicking and doing that narrative every single day. You just keep clicking. And then you develop patience to say, now what I said is, where do I make my decision? How do I treat this as live as I possibly can? What I'll do is I'll go, okay, make my decision at the end of the minute, as if I was waiting for this candle to finish closing, then I'll make a decision. So this was live right now. I'm going to make a decision. Where would I like to see this come back to? I'd like to see it come back and tap this. Well, it's already done that. Now I want to see this continue going higher, and I want to see it take out that high right there. So you wait for the minute to go by. Your line in the sand is this mean threshold right here. And then you click the next one. And then you wait, next decision. A couple of decisions later, we see there's a little imbalance right here. We traded through it. You go, I'm on the wrong side of this. And we hit right off that mean threshold. We opened and then we tapped it. So now we know we're on the wrong side. We're looking for a run back down into this little imbalance right here. So my little tickies would go right in here. And I'd wait see if that one gets hit. So you go to your next one and you go, boop, boop. Now you're back into, you keep your eye on that level there and this right here. Now you're above it. Now you can get back into this, find support. Do we have support above that level? And I can't see it because that's in the way. 7.3, 7.4. So we close at 7.4. So now we're looking at this level to provide support and start going higher. Turned on this again. Turned through. And you're back to that little level down there again now. consolidation. Still got to get above there. Now you're above it. Now you want to see if this provides support, that order block, and then keep going higher. Came back into that order block. Now you don't want to see that mean threshold get taken now. Otherwise, look for the lows here. See how we're in this tight consolidation? Keep practicing though. Keep practicing. Mean threshold of that candle. We've traded below it. So you're back to waffling now. Wait. Don't take the trade. Move to the sidelines. Wait for something, a clean setup to happen. Now you got to practice the emotional side, saying, if I'm wrong, I'm out. I'll wait for a cleaner setup. I'm not going to chase every little entry to go in and out here. I'm going to wait for a cleaner setup. So I'm in a consolidated market. Know when to stay out of it because it's not something you want. You wait for your clean setup. And then you just keep clicking through until you get your a cleaner setup for yourself, for your entry. You say, how many minutes would I have had to wait there? And you wait. I make my decision at the end of each candle. Click, make your decision. What are you going to do? I'm going to wait. Make your decision instead of trying to make your decision while the candle's forming. Anyway, that's just how I used to practice over and over and over again. You've got to constantly keep looking back at the range. And if you keep getting taken out, then you're going to say, where did I go wrong there? What was I looking at? What did I miss? And then you can stop. You don't have to worry about the charts. Continuing on, get back in sync with it. Say, okay, now I know where I'm at. I'm inside that range. And line it all up again. Just keep moving your sticks, your sticks from, it's like the sticks in football field, right? You just keep moving them up and down the field. That's how you can practice. I don't know if that helps you or not, Chris, or if you're even in there listening. Anyway, that's what I used to do. He goes a freaking crackhead. So true. I caught the scalp on the opening of 50%. Now the first presentation is working. It's resistance. That's why I took that another short. The house. We used to fight over who got to forklift, soul crushing stuff. Yes. I used to love the forklift. Oh man. And it's always the guy, the senior guy, be like, I'm the senior guy. I get the forklift. You're like, oh, you. I used to work in this thing called Felix. Whoa! Oh yeah, that's that one. Felix Services in Manitoba, in Winnipeg. They were a distribution center for all the die main, cam main, die upper, die lower. These are all camps up in the northern part of Canada. We used to load the belly of these Hercules airplanes with supplies to send it up to the DEW line, which is the radar central place up in northern Canada. And I used to work for the warehouse. So I was the picker. So I'd go into the warehouse and you get these little pieces of paper and they say, oh, these guys need a bolt. So you get this bolt and you can see, you're paying, you wouldn't believe me if I told you, but ridiculous prices for one steel bolt because it's government money. So it was ridiculous. And we'd ship all this stuff up to the DEW line. We'd load the belly of the Hercules airplanes with these giant pallets and the forklifts, and we'd zip around the warehouse and we'd load up big bins for each camp. And there was like dozens of camps up there, and you load them all in there. Then you package them, put them in a giant box, and then you put them on the pallet and then send them up north. And then the plane would land in certain places and unload. And then you'd have the passenger planes, and I used to load the luggage in the passenger planes. And I was terrible. I used to get in the belly of that airplane because you had to hand bomb all the luggage. You didn't have all the luxury of what they do now with conveyor belts and shit. We used to take the luggage out in these giant bins and little trailers we'd tow behind us. And then they'd throw the luggage in, and I'd try to load it into the belly, and you're trying to pack it all in there. I remember being on my back, using my feet to kick this guy's luggage, people's luggage, and just wedge it in there because you'd had so much of it. You'd have to find a place to put it. So you're in there smashing into it with your shoulder, trying to to drive it into this little hole, and where you'd be on your back and you'd be kicking there like it's trying to drive it into this little tiny hole. Yeah, that fits. So the guys who were up there must have been like, what crazy bastard loaded this plane? I can't even get the luggage out of there. It's been wedged in there so tight. So yeah, I remember back in the day, all the jobs I've had, they were fun. And I remember because we used to ship food up there too. And I remember taking my forklift one day. I was so eager because I got my forklift license and I was like, I'm the man. I was driving around the whole plant picking up stuff, and they're like, Hancock, get those eggs, move them up. We got to get them loaded on the box heading up to north. I'm like, okay. And I took my forks and I thought I caught the bottom of the pallet, and I went straight through this box of eggs. I was like, oh, and I just I'm looking, I'm like, oh shit. And the boss comes over and he looks at me, and I back the fork lifts out, and they're just all this yolk is just dripping off the tips of my forks, and I'm like, and he's like, you're gonna take all that stuff, you're gonna bomb them back on, get those damn eggs off there. I'm like, okay, sorry. So I'm hacking all the plastic that we just finished wrapping it all up with. I got it all off, take all the eggs off, pull the forked eggs off the pallet, put them down, rebomb them back on, and then he goes, don't you dare. It's like, Jimmy, get those eggs. I haven't got time to fuck it up again. I'm like, sorry. So yeah, I've done the forks through the eggs. Good old forklift days. Oh, that's good. Thanks, Peter. You took me down memory lane there. My good old days of working in warehouses. By the way, I found out that Hyperliquidity Perpetuals decentralized exchange is free of fees, and they refund the gas fees until March. I think they have 100% leverage for Bitcoin. Wow. IMC sounds insanely risky. Sorry, didn't understand what you mean. Yep, I picked meat. Same job, just meat. We had pallet jacks. Oh yeah, I used to love. You used to have the pallet jack, and you like use it like a skateboard, and then you're like, shit, this thing's got some tons of weight, so you'd have to kind of just put the brakes on or drag your foot behind you, and you get really good at it because then you just kind of drag your foot to slow you down. That was the only brake we had. We used to get shit for that. Now you're not allowed to do that, right? But we used to ride them pallet jacks all around the warehouse. It was like a giant skateboard with two legs. It was great. Sorry, anyway, let's get back to trading here. Oh, that's funny. Thanks, Peter. Whilst we're in this choppy crap, it's nice to go down memory lane and talk stories. Oh, that was good. Oh, Peter, you and I, man, we're probably working in the same warehouse, drifting the pallet jacks. Ah, yes. You get some major speed and just try to bring the back end around and see. Oh, yes. Ah, Peter, you're killing me. Indeed, we did. Drifting. You were the bomb. The guys be like, how do you do that, man? Well, you got to kind of lean into the back end. You got to kind of kick it around. You got to stay holding onto the handle. Let that back end swirl. Oh, man. Back in the day. Oh, that's a good one. You get lots of laughs on that one. That's awesome. Thanks, Peter. Oh, okay, let's go through these again, see if we can find anything else. Welcome to Non-farm payroll. I'm up $18 for today. That's it. That's all I've got. That's all I'm gonna. This is all crap. So we're not even gonna. I'm not even gonna touch any of this stuff. So it's kind of just fun to watch and see. Yeah. Want to see that get above here. We get a retracement. We can retrace to here and start going higher. I'd like to see that with live cattle. Still reaching for that. Still reaching for this. Okay, okay. Look at that. We got that premium array hit. And then the discount array. Look right here. Looky. You need to see this. You need to see this. I've taught you guys this over and freaking over again. When you are inside of a range, make a note, screen capture this. When you're inside this range and you've gone from box to box trading, so we've got this reversal, the old low is taken. You swing, you got another little low taken right here. If we can get back into that, great. If not, look at this order block. If we can't get back into that, we look at the next one. See how this one powered through this? You never got a chance to get back into it. This, it powered through that as well. You didn't get a chance to get back to it. And then it powered through the old highs and this one. Then you say, are we going to run back into this level? We did not get through the next one. We just powered back to this, got that, went from box to premium box, then reversed. There's your reversal. You come back up inside it. Look at that, nailed perfectly. Oh, perfect. And where is it? Quarters. 25% of that range goes lower. We did not take out this on a close. Sorry, this on a close. Took a little low out. We did not go on back to go higher. So we're going lower, looking for box to box trading, box to box inside this range, and keeping in mind the larger range that you're in. We're going to look for range extension if we get below that level. So watch. Box all the way through, traded below it. So we have this range extension. We're expecting that whole range to let go. And we want to see this level get taken on the downside as well. So there's your first hint. Trade below it, come back in, give it a little kiss. Trade lower. Box up here to box trading. Box is done. We've traded through it. On a close, come back up inside it and went whip, range extension. Now, if we trade back through that level again, find support at that, now you're looking for internal range liquidity. Do you see that? Do you see that? Screen capture that. Go back to this time in the chart and re-watch this video, this portion of the video again, and look for that boxing, box to box trading. That's our carrot. Here's our little box to box trading here. I like this guy. ThetaWave, YouTube. All right. Riding Benjamins, my man. Riding Benjamins. Sorry, that's not the one I want to show you guys. This is one we want to show you. Oops. Oh, yeah. Let's go boxing. That's boxing, maybe. Oops. Oh, fuck. Whatever. I screwed that up. Where'd it go? Anyway, you know what I mean. That's the boxing trading. That's boxing, baby. Anyway, you see them trying to be all cutesy on you. That's boxing. So go back over that, review that, so you guys can see. Ed, you caught that run up on the paper trade. Good for you. Good for you. Excellent. Also got 11:50 to 12 o'clock run up after touching the fair value gap. Also on paper. This one? Oh, this 10 o'clock one. Look at this delicious one here. Mind you, that's the hourly. Let's look at this on 1 minute chart. My buddy Gary says, just hit the damn circle button. You keep flipping it around like that. Anyway, 9 o'clock reversal. Number 9-10 turn. 9 reversal. Came all the way back up into that little tiny imbalance up here. Still inside that box. Traded lower. There's nothing in here, so you want to see it accelerate through. Unless you look at this as an immediate rebalance. Traded through it on a close. Rip through, extends the range. This whole thing takes premium and discount. You'd have to split this in half and wait for half of it. Mean threshold. All the way back up to premium. Little tiny imbalances in here and here. This one ripped through all of them. So look at that one, and this one. Closed on that, so you want to see it come back up inside that. It does. Comes back down to the discount portion. There's your box to box inside a premium discount range inside here. Go premium. Wait till you get below this level right here. Look at this. Trades below it, comes back up, finds support at it, and kaboom. All that was preset if you follow the rules. If you follow the rules, man. What a nice run. Reverse. Trade back up. It trades below it. You go on the wrong side of this thing. It's going to extend the range. So it pops back up inside it and runs down. Hits the bottom of the range. So you wait for a reversal. So I would wait for this level to get taken on the upside. Or wait for this reversal to happen here. You'd like to have seen it just pop down and extend the range just a little bit. But it broke. It just literally sat even on that and hit the rejection block again over here and reacted off of it. So you got to wait for this level to get taken to the upside and wait for this level here on a close. This takes through that one and actually closes out above that last up close candle right there. And then this one goes boop, gives a little kiss. And that's what you want to see, a nice big power reaction. Pull your fib tool from high to low. Here. 50% of the range. So as soon as it goes boop and hits that level right there, that's your entry. And you have to trust, you have to see it enough. And your stop will be one tick below that low. You run higher. As soon as you hit 50%, move to break even. Take half your trade off. This is just using the fib tool I showed you guys before. So there's half your trade off. Stop loss is now moved to just over break even plus the cost of your trade. And then as soon as it hits 62%, take another portion of your trade off and move the rest of your trade up to 50%. It comes back and it takes you, it would have taken you out right there. So now you move to the sidelines and wait. And if it takes off and does this up to the premium box again, you go, oh, I should have waited. No, you traded the freaking fib tool. High five yourself, celebrate, and you wait for a new setup. You just wait for a new setup. If it hits it and you get a reaction off of that, and you go, great, now if it stays inside that, I'll be happy. It doesn't. It just stays inside the mean threshold here. trades below, takes out the lows, you go, good. Now, do we want to see this go higher off of here? And where do I want to see it come back to? It's got to get it back above that little immediate rebalance again. Or you could go this one here. Needs to get above that. It doesn't. Trades below this. It does. Opens and just pops back into it right here. Right there. See that? That's the open below there. Run back into it. Slammo. Take 50% of that range. Now this is the range you're in. 50% is right there. 62%. If I reverse that, you'll see that might be. So you see how you can, there's always a setup available for you if you're looking for a specific setup. So if that's your entry back into this level right here. So now you go, as soon as it hits 50%, move your stop loss to break even, take half your trade off. It's 62%, take another portion of your trade off, move to 50%, which is right there, and it goes boop, takes you out. And then you're happy that you got out at 62% and paid yourself. Right? But again, you got to have the wherewithal to know, ooh, that's trading right back in there. I expect it to go short now. Wham. 50%, pay yourself. That's the Hadith type discipline that he would pay himself right there. Or you pay himself at 50%, move to the sidelines. I'm okay with that. That's a 2772. That's 2 handles. And then gold, that's a lot of money. Anyway, reverse inside this range. You got this little range here now. Premium array. You hit the premium array. Now you want to see the discount array down here get taken. Premium array to discount array right there. Boop. You hit it. Now do we extend below it? Yep. Now if we trade back into this and go lower, trades back into it, goes lower. We want to see this range extension and come lower now. And then you'd be aiming for over here. Am I just ringing the bell over and over again and boring the shit out of you guys here? Or does this make sense? Does that make sense? Again, if you like what we're doing, hit the like button. Makes sense. Camus, thank you very much. So, yeah, if you like what we're doing, hit the like button. I appreciate it. And if you're new to our channel, by all means, subscribe, hit the notification button. We'll let you know when we're on. We're on every morning. And just studying price action. You don't have to make trades. I've literally made 18 bucks today. That's it. So, not worth. And we're still calling it, Chris. You don't see me getting, oh, I gotta make a trade. I don't care, man. The markets are not moving as cleanly as we'd like. It's non-farm payroll. No reason to be in stressing yourself out, because next week, you got to say to yourself, it's going to be delicious. It's going to be delicious next week. It's month 2. Month 2. It's month 2, my friends. These next 3 months are going to be so much fun. Time. Whoa, time in a bottle. Moves slowly. And time can mean so much. Yeah, anyway, let's get out of here. I'm starting to lose my mind. Okay, so you see how this level is finding support? You want to see it get above here now? So, Chris, that other crazy meme shit you're in, and really it is, my opinion, it's just crap. But if you're bought into the idea that it's going to go higher, your Bitcoin looks like it's going to continue going higher here. As long as we get through this level here where we're sitting right now, We don't want to see it turn into one of these wicks. So like I talked about with that 1 minute candle, when are you making your decision? While that candle is forming, or wait till the candle is finished? So you got another 28 minutes before you make your decision about what to do next. Like the practice, one candle at a time, you make your decision now. Then you make your decision now. Then you make your decision now. Based on the closing of that candle. Look at where you're at and then decide. No different than any chart you're on. That's how you practice it. I'm looking at NQ and ES. Yes, sir. Let's go. My stop loss got hit. Yeah, you wanted to go short on that, right? That's why when you look at this, you could say it's got to get below here, Heron. It's got to get below there for you to say, now I'll go reaching for this mean threshold and the range extension and perhaps a deeper discount array again, like the lower part of this that hasn't been hit yet. But you've got to get through here. So, and then that premium array is right there inside this small little range. Look at this. Look at the ranges that you guys are in. Always look at the range you're in and make your decisions based on that. There's 50%. See how you tap it? Right there. And then you're inside this discount array. So you hit discount, premium. If we get above premium, then look for a run above that high. Pay yourself there. Don't forget the rejection block, because you've already hit the rejection block twice and went lower. So rejection block, look for 50% of this wick. So 103, 194. Then go for that high. Don't reach for this shit up here. There's way too many arrays for it's got to go through, and you got to get confirmation. If you're chasing it up, then that's your upside objective. You want to say, is it still meeting the parameters to reach for that? Is it still meeting it? And you got to be in the charts, not just going, come back 2 hours later and go, oh, I'm totally screwed. I thought it was going to go there, and it's down here now. And you missed the opportunity to see the reversal or the change in direction. Don't overreach on your PD arrays. Stay in price action. That's just my advice. Michael can do this. He can say it's going there. He might be combining a higher time frame premise, and this is just a 4-hour chart that is heading for its upside objective. Like let's say here, if that's here, it's aiming for here, which could be this on the 1 hour. That's how you use higher time frames to help you stay in sync with the markets too. Anyway, that's why that didn't work out for you, Hiron, because you got support here. And now you're through that level. See how that you pop through it. Now I'm looking for a run up here, but wait, you got 25 more minutes. The bills aren't going to pay themselves. Nope, that's why you have that's why you do what Peter did. You get 4 jobs. When you do this on the side, do you get really good at it? And if it takes you 5 years to get there, you got the job that gave you the security, and then you do this. Once you figure it out. I was fortunate enough to be able to work in the EMS industry in the oil patch. And I used to work in a medical clinic as well. So patients used to come in and see us. And I had my computer on the laptop. And if we had a slow night where you didn't have any patients coming in, I'd sit there on my laptop studying this stuff on a night shift. So I'd be trading London. You start practicing London Asia shift. And then in the morning, you go back, get some sleep, and then you trade the afternoon. Come back to the same thing again for 2 weeks in, 2 weeks out. Get a job. Don't use this as your be-all, end-all, start, finish. Because you're anchoring so much of this need to succeed and have to succeed on trying to learn the charts, and it's just way too much pressure to add to your nervous system, in my opinion. 72.30. What one are you on there? 72.39 a D. That means 72.9. Oh, you're over here. Ooh, look at you, Craig. We're happy for Craig. That open at 113, really good. It got above here. You see that? Ran up above it. Now we're looking for this candle to provide support and for this to continue going higher. So we're happy for Craig. I'm so happy for him. I hope that just keeps ripping it right through. And he wants 118. He wants a premium. He wants this. Here's your next premium though. So the next upside objective for me is 115.19, which is the top of this box. And we'll see how we act in here. I'm expecting a big price leg down this month. I'm expecting a nice big price leg down this month. February is a slight retracement up into March, down to the bottom of March, and then a run back into May. So 2, 3, 3, 4, 3, 5, 2, 4, 3, 5. AMD, Advanced Micro. Look at these guys today. They took out these lows, traded above that order block, old highs, return back to them, and they'll start marching higher. I want to see it get through that order block and through this 119, start reaching up for these higher objectives. Canada. Tap. So we came down and tapped that level. I want to see that react off of here. So to get back through 56.82. Oh, look how close we are to the premium. I just want to see that damn thing get hit. Just to say, yes, I knew it. Talk about patience, having to have patience to hold on to silver. You gotta have cojones to hold that. Okay, so oh, I see that come down from there. Finally hit it. Remember those little boxes we were talking about? Did they play important levels? Look at that. Tell me that's not an important level. Stuck way back in here. Remember when I drew those and said they were important levels? Look at that. Bang, right on it. Bodies, bang, bang. And then hit here. And unfortunately, it's in a whole bunch of chops. So, but it is meaningful to point those things out just so that you guys are aware of them. You're looking for a long here, Hadi? On a 1 minute? Well, you're on a 1 minute chart? 15-second chart. Let's look at a 15-second chart. Ooh, yeah, be careful here because we got this reverse. We've traded below it, but we didn't extend the range. We're pulling back up into consolidation cam model 1 for reverse. See, we've already traded below that level. So any type of retracement back to a premium array, I want to see if this now starts pushing right through this. So a discount, and then I want to see it run back down into here. So we'll see what happens here. That might have been a while ago you guys were talking about that. 1044 on a, 1044. This one. Or is this that T-Trades thing that what's his name was talking about? Where you take out a low, but you have to take out, I think it's take out a low, break market structure to the upside, and then take the first fair value gap that you come across, which is down here. Oh no, it would be up right here. Here, and then extend the range. Market structure break. Next one's here. Yeah. That T-Trades thing. Yeah, I'm not sure about that one. So you traded below this one. Now you traded below this one. And we're back up into the premium again. Order block support. It's got to go higher to hold in here. See how that rule of if a body trades below it, then we're looking for a range extension. And then if it trades back up and through this level, then you're going back into the range again. Comes back up into the consolidation, cam model 1. You want to see it trade below this level. It does. Comes back, finds support, and you want to see it drop lower. And it doesn't. It trades back into here, and you go, well, if it trades back above that, then we're going long. It trades back above it, you're going long. You want to see it find support off of here now and start to aim higher. That's how quickly you have to change up your mind when the rule for it to go lower keeps getting broken. That one going lower, expect to see that go lower. That one, expect to see it go lower. Ran right back up into the premium array. Now will it go lower? Will it break this one here on a close? See, it's compressing. Watch here now. Right. Oh, this is the bottom one right here. There's this one. We traded right on it. Gap below it. Pop back up. Now I want to see it come down lower. All the way up into here. It's fine. Come lower. Now practice this like you did earlier. There you go. There's the lower. It extended the range, took out that little low. Now it can come back inside that one and now extend, pop back into here. Literally closed on it, pop back into it. Now I wouldn't want to see it get above, right? 522 to go lower. So I'm going to go lower. I come back up. I'm going to go lower. Come back up to the premium. We're still inside that premium range. Premium reverse trades below it, inside it, Want to see that get taken on the downside? It does. Finally comes through, takes out the low. Range extension. Breaker. Look for this guy down here now. You're inside that one to that one. So that's your box to box trading right now. From that box to that box inside that range, or from this box here up there, waiting for it to get all the way down into that box right there, which is just hitting it now. So that's box to box in a choppy lunch hour session. Yeah, I don't know what it is one you're talking about there, Hedy. Sorry. Yes, sir. Now look at 1142. Just hit it again. 21,500. 1142. 1142. That's 1142 there. This one. There. Box. Consolidation. Box. 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 Extend. So through that range and extend. Does not take out, does not extend the range, just actually closes below it and then runs down, does not take out the low, gives you another reversal, comes back inside it, extends past the equal highs now. You want to see if this creates a new swing pattern above here. It doesn't, it just keeps going higher. Look for this reversal. Trades through it, comes back inside it, bodies respect it. See this box here, still holding price, still holding price, still holding price. Takes out these lows, reverse support. Back inside the box. Takes out that high right there, comes back inside it, extends up higher, reverse. Takes out the low, comes back inside the order blocks, mean threshold. All the way back to consolidation. One candle takes out this, does not return to it, so you wait for that one to get taken. It does, comes back inside the second one. Box to box. Keeps hitting that premium box. Takes out the low. Reverse. Mean threshold. Box. Reverse. Takes out this low. Comes back into it. Extends the range lower. Takes out the lows. You want to see this come back into this level now at 12.14. Find support at it. And now start going lower. Extend the range. Range is extended. Now you're looking for any reversal in here or a continuation on the downside, looking for discount array now. This one, then this one, then this one, this one. Just slowly start working your way down along with these bissies. So that's a very interesting set of parameters, but you have to really weather a lot of stuff there. And this tells you a lot about, I look at these things and I say, that's your psychology. That's your journaling. Because what's your self-talk here? What's your mind? Are you still staying focused on your upside objective? Downside objective? Is it still working? Are you still staying focused? Are you still staying in the charts? This is all self-doubt in here. Oh, it's not doing what I want it to do. Wait for it to give you a setup. These lows are taken. Reversal. Reversal. Trades back into the second one because the first one didn't get re-triggered. Second one's not triggered yet until we get above it. There. Now you look for this one. It comes back inside it. It starts working higher. Stay inside this. You're all happy with this all the time it's doing this. When you see that, after it takes the high and you go, ooh, is this the reversal I'm looking for? Nope, no body below it yet. So it keeps going higher. You go, great. Is this the reversal? Yep. That's the reversal I want. So as soon as it comes back into there, I'm out. Get my trade out anywhere inside here or here. We did not take out this side. So you wait for the first one. Comes back, peel off your trade and wait. If it takes out that low, then I'm looking for that candle to find support. It does take out the low, find support at it, extend the range back to discount array. Right there is where it starts. That's it for me. It's 10:51. I've enjoyed this little chat with you guys. Thanks so much for everything. We've had we got 36 people in here this morning. I don't know how many people we ended up with, but if you're new to our channel, by all means subscribe. We're here reading price action every morning, hopefully helping you out, hoping you how to understand price action better, looking for inversions, looking for key levels. The basic stuff Michael was teaching you is really what's really going to show you how price acts. I'm going to show you on the 15-second chart, a 1-minute chart, doesn't matter. Any chart you want, pick any asset you want, and we'll show you how to trade, or not trade, but how to stay on the horse inside all this mess. Why these are important levels, why they become important levels for premium arrays. See how they reacted off of those? When we come back into that range, here's your discount again. You're already inside the discount array already. So yeah, it's super fun price action study. So you can catch us. You can catch the big guy Hadi. He's in our live channel in Telegram. The link is above. Check it out. You're welcome to pop in there. As long as you're kind, you treat people with respect, you can stick around. If you're not, you're a troll, you're gone easily. You can see that this stuff works. You can see we're doing it live every single day. We're trying to stay in the chart, stay in some price action here, and hopefully it helps your setup. I'm not trying to teach you mine, although that's all you see is mine, but I'm trying to show you how to stay in price action. So if it helps you improve your trade setup better, it gives you a better understanding, and it gives you a little more confidence and settles this for you, then I'm happy. I've done my job, and I really want to try and get you guys as calm, relaxed kind of traders. You'll hear me picking on Chris, but I'm assuming the uncle role now. I'm playing tough love with him. I want him to succeed. I want Chris to be one of our main breadwinners in the years to come, and I want him to be able to say, hey, look, follow the rules. All right, yeah, I'm almost done. So I will see you guys bright and early tomorrow, and have a safe afternoon. And remember, it's non-farm payroll, so just study, Chris, just study the price. Do not participate. Just study price. I would love to go live for Asia session one day. It's right before bedtime, so I could do that. I'll be happy to do that for you there, Ed. Much love to you guys. Sending the love, baby. I will see you guys tomorrow.